Everybody is doing very, very well. You enjoyed yesterday's session? Yes. Thank you so much. Thank you. Thank you. Yes, even I am looking forward to today's session. It was brilliant. Perfect. So, with that, let me welcome you for the last time on the fourth day to the Financial Freedom Accelerator. And I'll keep on saying this is, in fact, I believe, the ultimate way to learn the concepts of stock market trading and investing like an expert alongside your career, where you learn, the right steps towards a healthy financial future. And I'm very, very happy to report across these 3 days, I've already seen people who have learned and taken action, right? So, with that, again, a very, very warm welcome to day four of the Financial Freedom Accelerator. It's our fourth day in this journey. On day one, we learned about finance for the future, wherein I taught you simple, investing concepts, a bit of trading at the very end. On day two, we learned all about how to build strategies. On day three, that is yesterday, we learned how to automate trading using AI. And on day four today, we're going to see how to use investing, that too with the help of AI, and to uncover multi-baggers. So before I move on to the agenda for day four, shall I quickly go ahead and revise whatever we had learned yesterday in day three? Yes, perfect, perfect. So what did we learn yesterday? We learned how you can do data analysis using custom GPT, that is the Market Analyst Pro by SpringPad. Pratik had shared this with you, and he had also shown you how to use it. Second, we learned how to use SpringPad's custom seasonality indicator in TradingView, wherein you can get a snapshot of any stock, any index, any ticker, right? And you can see a heat map of what it happens, right? Everything. Is it random or is there a pattern? There is a pattern, right? Third, we learned how to use the idea generator using a custom GPT, which was given to you, wherein without even knowing, any line of code, you can build, or rather give life to your trading ideas and see how it works in terms of algorithms. Then we saw how to backtest any particular strategy using Claude so that you know whether it has worked or not, with historical data, and you have more conviction to put it into forward testing, right? Or deploying it in live markets. Then we learned how to use the moving average crossover indicator in TradingView, right? And last but not the least, we saw how you could leverage the Bulls AI platform to completely automate the entire trading process. Can I have a big yes if that was the entire breadth of everything that we have learned yesterday? Yes, and we will be building on that, right? We'll see how you can smartly use AI in investing as well, and not just regular investing, but also in small and mid cap space. But before I take you through that agenda, I really want to, go back to the FFA rules once again. First and foremost, empty the cup. If you have been investing for a long time, forget about it. You don't need any prior knowledge. Start from a clean slate, right? And try and understand what is the logic behind everything that I'm going to teach you today. Second, do the work, take notes, whatever you feel important, please note it down. Because as you guys already know, there will be no recordings provided as we are not comfortable sharing recordings out of our community. And furthermore, you are people who have taken the step to attend the session live, right? We don't want to give it away to everybody who had got the invitation, but didn't even have it in them to come and join the session. Okay. Third, participate as you guys have been throughout the 3 days. I would request you to continue that enthusiasm and participation in the chat. If you are active, it not only gives you more energy, but it also gives me more energy, right? And the more energy that both of us can bring to the table today, the better the learning can be, right? And last but not the least, if you do not pay attention, you lose opportunities. There's no going around this. There's no beating about the bush. That is the hard fact, right? So please, please, please try and pay attention. It will be difficult for me to go back to any particular concept, multiple times, right? Because I have a lot to cover, and that too in such a short period of time. So, having said that, can I have a thumbs up if all of us were good to go with the rules? Yes. Perfect. Perfect. Now, moving on to what we will be covering today. Okay. What we intend to cover today. So, let me take you through the agenda for day four. All right. So, first and foremost, we are going to see how you can filter fundamentally strong companies, because that is one thing that all of us need to do. Quality is the most important thing that you can look for when you are investing. Second, we'll be seeing how you can compare companies using AI. Okay. And that is, I think, a problem that most people face. But at the end, they take the easy route and they resolve to gut feeling or some sort of confirmation bias, or worst, even news, right? What is trending? Trending does not work in the markets, right? And by trending, I mean socially trending. So that is one thing that you need to be aware of, and that is one thing that we are going to, you know, solve with the help of AI today. Third, we're going to see how you can do financial analysis using AI. Fourth, we will see how you can analyze and filter small cap companies using AI. Again, this is wherein we shift our focus to small caps. And last but not the least, I'll be sharing you the entire checklist for small cap stock opportunity ideation. Okay, so a lot to cover today, even though it seems like five bullet points, but there is so much I need to teach you across each and every one of these learning items. Okay, now with that, are we ready to get started with day four? Yes, to see how we can use AI in the entire investing journey, and that too smartly, to identify small caps, how we can make our life easier. Yes, perfect, perfect, perfect. Now, before I begin, I would like to ask you a tricky question, right? And I want you to answer. On a scale of 1 to 10, how strongly do you feel self learning the basic concepts of financial markets will make you successful as an investor or trader? Okay, 1, 0, 2, 3, 4, 10, 7, 7, 3, 2, 0, 0, 1, 3, 2, 9, 77. Okay, 8, 4, 3, 10, 2 or 3, 5 to 7, 6, 8. Okay, so I got the drift. Majority of the people are between 0 and 3, 0 and 4, but there are a lot of people who are very confident, and it's good to see that confidence. But let me tell you something. Self learning, right, will be sufficient is one of the biggest misunderstandings in the markets. And I'll tell you why, right? Because while learning on your own is essential, it's very important. It's just a piece of the puzzle, right? Having access to mentors who have been there, done that, it's very important to pick their brains and see what has worked and what has not worked. Correct. And this is an important step in enhancing your skills, understanding the topic better. And think of it this way, right? If you want to learn a new language in today's day and age, of course, you can read a book, or let's say you can use Duolingo, right? Very good app. But the thing is, it will not make you a master at it, right? It will not, you'll be knowing bits and pieces. But what really helps is, for example, when you start, learning Japanese, for say, you need to have that interaction with other people who are fluent in Japanese, right? So that you can pick cues from them. You can see what they are doing, what they are not doing. And that is why you need a sort of cohort where there are like minded people who are all on the same journey as you and are all doing the same thing. And you can learn off of each other, right? And having said that, I would like to be that friend, that companion, and that mentor in today's session as well, so that you can understand the logic behind all the concepts a little better. Okay, now first I would like to ask you again, as you know that one of the most important topics that we are going to cover today are small cap stocks, correct? Now let's understand small cap stocks better. What do you think are small cap stocks, in your opinion? As the name suggests, okay, you remember we learned about capitalization in day one. What is market cap? We learned it for HDFC Reliance and how you rank it. So, what was the market cap? Basically, the value of the equity of a company. And now, small cap means the value of equity of that company will be small. Got it? As simple as that. Now, to put a formal definition to this, right? In India, small cap stocks are shares of publicly listed companies whose market capitalization is below 5,000 crore as per SEBI, right? And this is one of the accepted definitions, okay? And the other way is to rank all the companies in terms of size from biggest to smallest. So usually 1 to 100 are is the large cap space, okay? Give or minus a few, right? Then we have the mid cap space, which is 101 to 250. And then beyond 250, all the stocks that we have are usually called small cap. And what we have observed is in this range, usually the market value is less than 5,000 crores. Okay. So this is what is the definition of small cap stocks as per SEBI. Now, I would like to tell you what are the advantages of small cap stocks. First, they have high growth potential. Now, tell me something. Let's go and look at something. So, for example, Reliance Industries, right? What is the market cap? It's a tussle between HDFC and Reliance who is the biggest. But let's take Reliance, okay? What is the market cap? 19.63 lakh crores, right? Now, do you think it is possible for Reliance to become 10x in the next 5 years? 10 times as big or 20 times as big? They are already everywhere. They're doing everything, correct? Do they have that much room to grow? Right? No. But let's look at something like this. Okay. Let's look at this particular stuff. This is Vasa Denticity. They do e-commerce basically for dental items. It's an e-commerce platform for dental items. What is the current market cap of this company? Less than 1,000 crores, 985 crores. Now, is it possible because they're operating in a niche and they have a market leadership in that niche? Is it possible for this company to, let's say, you know, become 10x in the next 5 years? Yes, because they have a lot of room to grow, correct? So that is why I say that these small cap companies, right, they have high growth potential. The second thing is, how many of you knew about Reliance, by the way? Can I have a show of hand? I'm pretty sure everybody would have heard of Reliance, correct? How many of you knew about this company particularly, Vasa Denticity? No, right? I'm pretty sure 99% of you did not know about this. And that is another benefit, right? It is often undervalued, these small cap stocks, because most people don't know about them. These are relatively small. Not all the institutions and experts and analysts are following these stocks. These are often undervalued or undiscovered. So that is an advantage of using small cap stocks. And as I said, because they have a lot of room to grow, what happens is if the company is successful in its growth, correct, they can deliver a lot of returns over the course of time as they become bigger and bigger, correct? But are there only advantages to small cap stocks? Absolutely no. There are disadvantages as well. I will tell you, my job is to be absolutely honest with you. Small cap stocks, they have their advantages, they have their risks as well. What are the risks? Because they are small, they have high volatility and lower liquidity, because not too many people are trading on it, too many people are investing in it. What happens is on days when there are movements, the movements are very, very fluctuating, right? It can shoot up very fast, it can shoot down very fast. And what happens because lower and lower people are trading this stock, the liquidity is lower. And what do I mean by liquidity? Simply the number of times a share of a particular stock is traded in the market. Correct? So when liquidity is lower, let's say what happens when you want to buy that stock, you have to buy, pay a premium to buy that stock. Otherwise, nobody's going to sell it to you. When you want to sell it, you have to sell it lower because there is not many people who want to buy it at the current price. What happens when you're buying or selling Reliance? On a daily basis, the volume of shares traded of Reliance is more than a couple of lakh crores, right? So whenever and you might be what trading with 100 shares, 1000 shares maximum, you will always have somebody who's willing to buy or sell at the price you mentioned. But that does not happen with small cap stocks. Does that make sense? So that is why small caps have higher volatility and lower liquidity. So that's a concern. Secondly, they're more sensitive to economic cycles. Now, for example, ITC, for example, is so cash rich, correct? Now, let's say any momentary regulatory hiccups or something, will ITC, or let's say sales pressure, they cannot sell their product, any regulation comes in, or any, God forbid, COVID happens, ITC has been surviving for so long, okay, that if they do not make any sales, they have some hiccup for, let's say, a couple of months, they will still be able to survive in their business, right? Because they have a lot of cash, they have a lot of capital, they have been doing this for so long. Okay. But think of something like a Vasa Denticity again. It's a relatively small company, correct? Let's say they're not able to sell their product. Let's say they don't get supply from their distributors, correct? Do you think they are big enough to manage through this period? No. So there these sort of companies, smaller companies, hence as a result, right, are more sensitive to economic cycles. And last but not the least, because these are small, of course, there is a lot of room to grow, correct? But because they are small, do all small businesses become very, very big businesses, right? A lot of you are business owners, right? Do you think that it is possible that you have seen that every small business has become a very big business? No, there will be challenges, and it is like a constant uh, you know, test and clear. It's a constant hurdle that you need to face, correct? And every time you can't win. So that is the risk. Okay. So I'll just repeat, small cap stocks are good, but they're volatile. If you can't handle volatility, then you should stay away from small cap stocks. Yes, they have big returns, but big returns also require big risk appetite. And that is something I have been saying on day one as well. You need to personalize your investing. If you're somebody who would rather preserve their capital protection is most important, then you're not a big risk taker. Right? Now, so having said that, having given you a gist of what a small cap stock is, I want to take your attention to a very interesting study done by a very famous person, right? And this study is about Mr. Warren Buffett. Now, Buffett once bet $1 million, right, back in the day, against a group of sophisticated hedge funds. The challenge was to see who would come out on top in terms of returns, of course, over a decade or over 10 years. Okay. Now, who do you think won? Because Warren Buffett is like the godfather and everything, you would say Warren Buffett, right? But the funny thing is, and you're absolutely right. But the most fascinating part is he did not use any complex investing strategies. Instead, he relied on a technique that doesn't require any skill whatsoever. Do you know what was that skill? Well, before I show you that skill, let me show you. So this was in his Berkshire Hathaway's annual letter for 2017, and that is wherein he revealed the details of this bet that he had made. These are fund A, B, C, D. These are all the hedge funds, and then you have Warren Buffett's bet, which is this S&P 500. What is S&P 500? It's one of the most simplest thing that you can do. It is an index fund. Like you have Nifty 50, Sensex, which you can invest in via mutual funds or ETFs. Similarly, you have the S&P 500 index, and that is wherein he put his money. That was what his bet was. And it outdid all these fancy hedge fund managers. Now, what does this illustrate? That sometimes investing does not need to be that complicated. The simplicity of the method is that it is, and the beauty is that it is simple yet powerful. Okay. Now, and that is what Warren Buffett said. If you want to, don't try and be fancy, just buy index funds. But do you think Warren Buffett got rich just investing in index funds? No, right? He started off as a trader. He used to invest in multiple small cap companies. But again, does that mean that his study was false? Absolutely no. In fact, over the last 10 years, the S&P 500 index did in fact beat all these managers. And then you might be thinking that, Rahul sir, if that is the case, why have you been teaching us all these logical frameworks for investing in day one? Why has Pratik sir been teaching us, about all these different styles of trading, of using AI in trading, of different types of strategies, right? Why are you focusing on, the need to generate returns? What did I say? It's the only thing which you can control, which will determine the future value of money, because time and the amount you invest is not a something which is in your control. That is a constraint. But going back again, you know and all of you will have these questions. If hedge fund managers can't, how will you? Is that legitimate? Yes. Why are we teaching you all of this? Well, let me tell you what is the problem that these big players face. First and foremost, they are too large to be nimble. Correct? Now, for example, let's leave aside hedge funds for a moment. Let's take mutual funds only, which all of us are aware of. Now, on average, a mutual fund will have an AUM, okay? And by AUM, I mean assets under management, or how much capital they are deploying. They will, on average, have a AUM of 5,000, 6,000, some cases 10,000 crores, correct? All these index funds. Okay? Now, Harshit, why? Okay, any which ways. Uh, so they have a lot of capital. Now, tell me something. Can they meaningfully invest in small caps? No, because they are very, very large. I'll tell you what happens. For example, you look at Vasa Denticity. If these mutual funds, right, sitting at 10,000 crore capital per se, they will be investing across a lot of funds, and they have to, let's say, put in money in this. Okay. Even if they put 1% of their capital in this, how much is 1% of 1,000 crores? 10 crores. Okay. That itself is going to drive the price like crazy. That itself is going to drive the price like crazy. So when they're buying, they'll have to, because imagine, who is selling 10 crores worth of Vasa Denticity? Nobody, right? In a single day. Correct? But then, and if they invest smaller amounts, it does not make sense for them, because they will have criteria, they'll have rules, how many stocks that they can invest in, what is the minimum ticker size that they need to invest in a particular stock. So all these small companies, right? All these small companies, they have a really, really big problem when it comes to investing in small cap stocks. Correct? Now, what is the second thing? Because they're too large to focus on these small companies. What is the second problem that these big players have? They have liquidity limits. As I said, do you think there are people who are selling, let's say, 10 crores or 100 crores worth of these stocks on a daily basis? No, right? So, how will they go ahead and buy it? So, they are constrained by liquidity. Correct? What did I say? What was liquidity? The daily volume of the transactions in a particular stock. Okay. So they avoid them because they can't meaningfully enter a particular stock or exit a particular stock, because their position size is very, very huge compared to the daily trading volume in a particular stock. Third, okay, they're forced into large caps. Now, When so the only stocks which can take the amount of capital that they put in are these large cap stocks. But what happens in the large cap stocks as well, right? All the other institutions, all the other mutual funds are also facing the same problem, and they all of them have to crowd against each other in the large cap space, and they're competing with all the pros. So this leaves them with little room for outperformance. Does that make sense? Everybody is facing the first two problem, right? And as a result, they can only operate in the large or in some cases the mid cap space. But that is where the problems start arising, because you are competing with other, pros who are also having the same problem, and then you are crowding into this very, very niche space. Then what is the other problem? They have slower moves. Okay. And what do I mean by slower moves? Now their trades take weeks. Correct. They can, if they want, let's say if one particular mutual fund wants to buy 100 crores worth of a stock, do you think they go in one day and buy 100 crores of that stock? No matter how much the trading volume, if they push an order for 100 crores, it will drive up the price. When they want to sell that 100 crores worth of stock, it will bring down the price. Correct. So what happens is this buy the stock when they need to invest little by little on a daily basis, right? When they need to sell, they sell it little by little on a daily basis. So do you think it's a fast process or a slow process? Okay. So that's a slow process, right? And last but not the least, all these now coming back to hedge funds, which we were focusing on, right? It is a 2 and 20 fee structure that they operate on. What is a 2 and 20 fee structure? Let's say if you are investing in a hedge fund, right? If you put 100 rupees, and it will take 2% as management fees. Okay? That is 2 rupees they will charge you for managing your 100 rupees. And then if they grow your 100 rupees from 100 to 120, okay, that is a 20% profit, they will charge 20% as performance fees. So 4 rupees they take from there. In total, right, if you're putting in 100 rupees and that 100 rupees becomes 120, you will have to give 6 rupees to the manager itself. So the cost is very high. As an investor, it eats into your returns a lot. Okay. And that is the problem that all of these hedge funds had been facing. And that is why Warren Buffett's S&P 500 bet outdid all of them in a 10-year span. Right. Now, Warren Buffett did say that, investing in index funds is a very, very beautiful thing. But there is another quote that Warren Buffett made. And let me know if you're aware of this. I think I can make you 50% a year on $1 million. No, I know. I can guarantee that. Correct? So he says if he had only $1 million, by the way, anybody knows how much is Berkshire Hathaway? They operate assets of more than $300 billion. Correct? So 1 million is just like a drop in the sea. Now, he says, if I only had to manage $1 million, I can guarantee that I'll generate you more than 50% a year. But do you think when he's saying that he'll make 50% a year, he's talking about index funds? Do index funds or the indexes actually give 50% return every year? No, right? And that is exactly what I'm trying to tell you. He is talking about investing, you know, outside index funds into more smarter investments. And why did he say if I only had to trade with $1 million? Because it's a small capital size. Now think about the $300 billion, right? Is it nimble, right? Does it face all of the problems that a big player faces? Absolutely yes. But with only $1 million, if he had to manage, does he face any of those problems? Absolutely not. And that is exactly what I want to tell you. That is a small cap advantage, right? Now let's understand our advantage a little better. If we have small size of our capital, let's say what is the maximum number that you are going to invest in the markets? 1 lakh, 10 lakh, 1 crore, 10 crores as of today. not more than that. That is still small. Okay. And you can invest in small cap where growth often happens, and you can do it with speed, right? Even if you are investing in a small cap, it is big enough, the daily trading volume is there to support your investments, correct? What's the second thing? No liquidity problem. Because your trades are tiny, you can enter exit in a single day at, instantly without moving the prices. If you invest 1 lakh rupees in a small cap, it has ample liquidity for you as a small cap person, for you, right? It has ample liquidity to cater to you. Will it move prices? Will your 1 lakh rupees make any difference to the 985 crores? Now it becomes a drop in the sea again. So that is an advantage. We don't face a liquidity problem, the big players do. We don't face a speed problem, the big players do. Okay. Less competition. Again, we can then possibly invest in small caps. And what did I say? It is usually overlooked by all these big institutions, right? Because it is not a part of their investable space, right? Not many people know about this. Not many people are researching this. So, in smaller overlooked companies, you aren't actually betting against top hedge funds for the same ideas, right? So, you're not competing with all these experts in this space as well. Okay? Then, right? Can you be fast to act? You can buy or sell instantly without having to wait for days. Remember the big players, they needed weeks to enter a investment. They needed weeks to get out of an investment. You don't need to do that because your trades are small. And also, there is no cost investing because you don't need to give this 2 and 20 fee structure to these hedge funds. These are simple strategies. Maximum what you get need to bear is a delivery cost or a small STT and brokerage. Correct? So that is the advantage that we as smaller participants in the market or we as retailers have while investing in small caps. Now I got a very interesting question. Should we go and invest in penny caps? What did I say? Of course, there are advantages, but there are disadvantages as well. It is risky. Absolutely, yes. Is the risk reward high if done right? Absolutely, yes, as well. So you need to be very smart about how you go about operating in this. And that is the power of small caps in investing. Okay. Let us see a few examples. Correct. For example, I'm giving you a few small caps which have turned into mid cap and large caps over the course of time. They are simply limited, right? Only 10,000 rupees invested in any of these stocks, right? For example, in Symphony, would have given you a 2,530x return, right? That's 2,530 times. Eicher Motors, 1,461 times. Bajaj Finance, over 1,200 times. Jyoti Raisins, over 1,800 times. Avanti Feeds, over 1,500 times. Astral Polytechnic, over 570 times. Now, of course, for each symphony, for each Eicher Motors, there will be cases wherein this 10,000 would have become zero as well. Correct? But, and I'm telling you the reality, but what is our takeaway? That when done smartly, when done in a proper strategic framework, over a long period of time, if you can take on risk, right, it can be a very, very strong value addition to your portfolio. Okay? Does that make sense to all of you? Is it only glittery? No, of course. There will be stocks which lose out. As I said, not every business can grow, right? Not every good business, a small business can become bigger and bigger player. But that is where our analysis, our understanding, our research comes into the picture. And before I tell you all about that analysis and research, I wanted to discuss a very important person, right? Who capitalized on a similar small cap opportunity with Titan. And I know once I said Titan, everybody knows who that is. Yes, absolutely. The late Rakesh Jhunjhunwala. I would say he is rather the Warren Buffett of India. Now, he invested in Titan when it was a 160 market cap, crore market cap company. Put it into context. Let's see how big is Titan today. Okay. What is the current market cap of Titan? 3,67,000 crores. Okay. By the way, how many times is it? Let's do that. Okay. Just a second. Calendar opened up. What is this? Okay. 3,63,000 crores. Near about 25. Okay. 160. It's 2,300 times. 2,300 times. And as a matter of fact, you know, it's still the biggest component of his portfolio, right? But was when the moment he invested in Titan, did it keep on going up and up and up? Do you think that is the case? No, right? For every Titan, for this Titan, he would have had, and he had, if you go through his journey and everything, he had more than 10, 20 companies which went to zero also. But you need only one winner. And even Titan, as a matter of fact, went down by more than 50% after he had invested, but he kept in being invested in it. Okay. So again, that is why if you go through people who have been successful in their journey, right, you will understand how diversification works, how they research, how they stay emotionally unbiased. All of this are very, very important learnings that you can take out of these successful people. Now, okay, enough about what has been done. What are the possibilities? I know you are waiting to see how do we also navigate this space, right? Isn't that not what all of you want to? How to identify good small cap stocks? What is the framework? What is the logical, rationale? Yes. And that brings me to the agenda for today, which is the golden rules of small cap investing. And I'll give you a 7-part checklist or framework that you need to follow to do a end-to-end analysis on small caps. Okay. Now, the first thing that you need to understand is finding correct sectors and analyzing the stocks, right? That is the first thing that you need to do. Identify the right sectors where there is growth, where there is a lot of room for growth, where there is a lot of support from the government, and it is a space which is evolving. There is a lot of demand, correct? Because only if the sector or the industry is growing as a whole will your small cap also have the room to grow, correct? So that is the first important bit that I want to share with you. That is the first checklist that I want to share, right? For example, how important choosing a correct sector is, like 2 lakhs invested in KPI Green turned into 80 lakhs in 3 years. Okay. So, and renewable energy had been the talk of the town, everything. And the right industry at the right time can make a lot of difference. But the next question is, like, you know what? That's great. But how do we also identify such sectors and opportunities? Is that the next immediate question? Well, to teach you all of that, right? Let me tell you what is the process of how investing works in a professional setup. Okay. For example, oh, just a second. For example, right? Do you think that professional institutions just wake up, they see that everybody's talking about a particular stock and they go and invest in it? Do you think that's the way? Everybody is talking about, let's say, persistent systems. Do all these institutions just go look up persistent systems, they go and invest in it? Absolutely no, right? They follow a very methodical approach. And believe me, not like across wealth management, across investment banking, across private equity, I have found one common theme across all these four, all these three domains that I have had the opportunity to work at. There is one common flow, and it is comprises of four parts. First is there is always focus on starting from the base or the root. The first thing that they do is they identify industries which they think are going to grow. correct? That's the first step. How much to invest, where to invest comes later. The first thing is they try and research. They have teams of economists who research the upcoming industries and the growing industries, right? They look at a lot of data, and that is the first set of analysis that they do. Second, then, after they have identified a few good industries, they look into those industries in detail, identify who are the major players, who is driving innovation, how much demand is there for that industry's product, are there any technological constraints, any regulatory constraints, right? Which stock is has the pricing power, and all of that they do, correct? So it's like going in depth into that particular industry and identifying the stronger companies in that industry. Now, once they do that, correct? Of course, can they go ahead and invest in each and every company? Does it make sense? No. Then they get around to comparing all the good companies that they have identified in step 2. They go ahead and from multiple angles they compare them, they do stress testing, this that, and then they arrive at one company which is, as per their analysis, the best of the lot. And you might think that their work ends here. Do you think that their work ends here after they have identified the best company based on their research? No, right? There is a fourth step, and there is a absolutely correct, Manoharji, right entry, correct? That is the fourth step. They do their research and valuation on that particular stock to try and identify whether, okay, it's a good stock, but is it good to invest at this stock at the current price or not? There's a Gujarati saying which goes Bhav Bhagwan Che. That means price is God when it comes to the markets. It tells you everything that is going on in a company, correct? And that is why it is very, very important to invest at the right price. And the fourth step is exactly that. They try do their in-depth analysis on that stock, try and identify what should be the correct price of that stock. And this is the common theme I have seen in wealth management, in investment banking, in private equity, right? On how the investing journey looks like end to end. Now, tell me something. Does this look sensible to you? This looks like a logical framework. Yes. Does it make sense? Logically correct? Absolutely right. They don't just look at any random industry, particular stock, they pick it up, they research and invest. It's a proper methodical approach. Now, and I have a very quick question to all of you, correct? How many of you can confidently analyze the markets yourself and build a strong portfolio? And be very honest. I have told you what the steps are, right? I have exactly told you what the 4 steps are. Can you go ahead and do that on that own confidently? 10% no. I'm seeing a flood of no's because, and it's good to see that you're being honest because, for example, if I go back, you have teams of economists who are sitting and doing this, right? You have industry experts who, there'll be one expert for every industry, right? There'll be specialized teams. For example, Goldman Sachs in the research division, they have separate teams for metals, they have separate team for NBFCs and banks, they have separate teams for telecommunication space, they have separate teams for the entertainment space. That is their job. Then you have company comparison. There are analysts who are working day and night to compare these companies, right? And then they have valuation experts who are valuing this. These people have years of you know education and years of practice doing that, and it is very natural. And I'm thanking you for coming out, to be true on this, saying that it is difficult to do, and I understand it, correct? But if there is a problem, if there is a roadblock that we are facing, we need to solve it, right? We need to solve it. That is why we are attending the 4 days of FFA. And that is what brings me to AI powered investing, right? How we at SpringPad use AI in our investing journey. Okay? Okay. And it is my promise that by the end of today's workshop, you will be able to independently evaluate stocks and portfolios with clarity and confidence. Do you think it's a very tall promise that I'm making? It is a tall promise, but do you think I'll be able to stand by it? Make good by you? Yes? Okay, amazing. Thank you for that vote of confidence. Now, let me tell you how we at SpringPad use AI to analyze industry trends and use AI to help in our investment decision making journey. Okay, so this is what you have been waiting for. Again, this is going to be amazing for most of you, now, given that you're coming from an AI program itself. This is going to be really eye opening. And all of you know that if we are talking about AI, right, we have to talk about the AI tools. Okay. Then we have Grok, we have Perplexity, we have ChatGPT, and we have Claude that we are going to use. Now, tell me something. All of you have used AI tools, correct? All of you have used AI tools, right? Now, tell me something. Is each and every AI tool the same? Does it give the same sort of responses? No, right? Just like human beings, like you and me, right? If I let's say, Arnab ji and Swati ji. Arnab ji might be very good at maths, correct? Give him any math problem and he'll be able to solve it. Swati ji can be very good at, let's say, chemistry. Give her any chemistry problem and she'll be able to solve it. And let's say somebody else, let's say Uzair, might be very Shashi Tharoor like when it comes to English and oration, but maybe not that good at math or chemistry, right? So similarly, all of these AI tools have their sets of features that they are good at, a different style of analysis. For example, Perplexity is great at doing research work. Hands down, it can be as good as a PhD grade research analyst. Grok is great at doing a broader set of multi-level analysis at the same time. Chat GPT is great at doing logical analysis, right? Only thing Grok is able to do better is it can handle a lot of multiple threads at the same time. Chat GPT can do better at longer threads, right? And Claude is hands down the best when it comes to coding, financial analysis, and data analysis. So because these are good at every different things, we will be using these AI tools to their best potential depending on the task at hand. Does that make sense? If you want to do research, we'll use Perplexity. If we want to do data analysis, we'll use Claude. Makes sense? And by the way, before you ask me, you can use the free versions of all of these AI tools to do everything that I'm going to show you today. Okay. Now, I want you to be participating, correct, as much as possible so that I understand where you stand. Okay. Tell me something now. Can you realistically scan thousands of global trends to identify the future growth opportunities in sectors manually? Remember what was the first task? Is to do industry analysis. Is it possible? It's difficult because you not only in India, when you are doing industry or sector analysis, you have to take the entire global context, correct? You need to understand in which country what policy can have an impact on your particular industry. Where is the entire world headed through? And that is what these economists do. They sit and read and read and read and read throughout the year, correct? Look at data, look at new research. But of course, we don't have the time to do that, correct? So, how do we solve this problem? We need to do the sectoral analysis, right? But we have a roadblock. So, this time around, we will be using Perplexity because it is great at doing deep research work. Now, are we ready to see how we can use Perplexity to do this for us? Yes? Okay. So, coming to Perplexity, of course, where there is a AI tool, where there is a task at hand, there will be a prompt. Okay. So here is SpringPad's growth sector deep research prompt. All you need to do is copy this entire prompt. Okay. It's just a 4-page prompt. Copy it, go to Perplexity, paste it, make sure that the deep research mode is on, right? And then you hit enter. What is the prompt asking Perplexity to do? To do a proper PhD grade analysis, give a 300,000 word expert analysis on India's economic landscape, take the global context, whatever is happening in India, bring all of that data together, and then try and make a sense of, if this is happening, which are the industries that are going to benefit the most. Now, in order to save time, I have already run this analysis for you. Now, all these deep research prompts, they take time. Just a second. Yep. So I already done this for you, and let me show you the answer. Where did the answer go? And this is just a second. Hmm. Just a second, guys. I think we need to wait for this to finish. Yeah, usually the report generated, it is there, right? And it had to happen while we are having this workshop. Okay. So let's wait for it to finish generating it itself. Okay. Let's see. Where is it? Is it still working on it? It's working on it. Acha. Now, while it's working on it, because I've run it multiple times, right? I have built this. So, what is the sort of analysis that it does? Correct. First and foremost, it will look at all the global data, what is happening, right? I'm talking trade deficit, trade policies, tariffs. And now we are having a lot of tariff agreements also, right? Correct. So it takes into context all of that and sees what is happening. Which sectors is it going to benefit a lot? For example, you have heard about when this UK, India, and EU India trade agreement was signed, right? What was that one thing each and every influencer was talking about? That one particular item or commodity. What was it? Automobiles, right? Everybody was talking about cars. So you can see how a trade policy can have a direct impact on a particular industry. Of course, it was half baked knowledge. It was only for CBU units, but you get the drift, right? So what this does is, first and foremost, what is the task at hand that we were trying to achieve? The task at hand that we were trying to achieve was to identify which are the sectors. First things first. Now, over the next 5 years, it gives you five sectors which have the highest growth potential. Okay. And by the way, each and every data point that you see over here, it has got multiple resources. Each and every data point you can go back. Like I said, it's like a proper PhD grade research report. It goes through, I think, some 150 or 200 sources. Depends. Okay. Now, for those of you who like to stick to the point, have you found your answer? Have you been able to identify five industries which have the, you know, based on the research, has the highest growth potential over the next 5 years? That's amazing in itself, right? That's amazing in itself. But what's even more amazing is how they come to this answer. How does Perplexity research out this answer? And as I said, that it does like a proper, sectoral researcher. First and foremost, it looks at macroeconomics, right? What are the current economic India indicators within India? So it looks at India's GDP, India's growth rate, the inflation rate, the fiscal policy. Then it looks at what are the structural enablers, what is structurally happening very well within India. Okay, structurally happening very well within India. Where did the structural policy go? So it looks at the demographics of it, the statistics of the population, all of that. It looks at that. Okay. Second, what are the infrastructure development that is happening in India? Now, why is it going through all of this? Why is it looking at the structural enablers or the macroeconomic indicators to try and identify where is the broader trend in, where is the support in, and what it can potentially, which industries it can potentially help. So that's that. But what did I say? It's not only about what is happening in India, it looks at the global context as well. What is happening globally? So it talks about export, it talks about trade deficit, it talks about tariffs, as I said. So it takes all of that into factor and then sees, okay, it might be detrimental to this particular society sector, but it can be good for this particular sector on the other hand. And then for each and every industry, each and every one of those five industries that it has chosen, it gives you an in-depth report of what is happening, within the industry, what is happening within India and globally that will support this industry. So for example, when it comes to renewable energy, it has strong demand, it has a lot of technological innovation which is happening, and it has a lot of backing from the government, and all the major business houses are investing into it. So that's a very, very good sign. So it tells you about everything that is happening, right? What are the production trends? Who are the key players? What is the regulatory investment environment? Who are investing, correct? And what are the emerging subsectors in this space? Same goes for electronics manufacturing, which is a second industry. Takes you through it in detail. Third, pharmaceuticals, takes you through it in detail, correct? Fourth, fintech, takes you through it in details. And same for infrastructure, tells you the why behind these five names coming up. And not just that, right? It does a policy analysis. Again, as I said, policies have a big impact on what happens to a particular industry. For example, uh, how many of you have heard about Borosil Renewables? Again, on a side note, this will give you more context, right? So they enjoyed a Borosil Renewable. If you have heard of Borosil Renewable is one of the other companies that they operate, and they make the glass panels for these solar modules, right? Now, Borosil Renewables was is one of the outside China. It is one of the top four apart from China in the entire world in terms of scale, and they were enjoying this, right? Because there was a high tariff on this glass being imported from China for a few years. 1.5 year back, what happened was this tariff, it expired. So it was for a period of 10 years. That tariff expired and the government did not renew it. Now imagine what happened. Is Borosil was did Borosil do anything differently? No. But then they started facing a lot of pressure, correct? Because now people could buy from China the solar glass panels instead of Borosil, and they could still do it for cheaper, correct? So, did Borosil start doing anything differently? Absolutely no. They were operating the same way, but they face so much of pressure as a business just because that the policy was not renewed. So, do we understand how important it is to see the impact of policy? And it does exactly that as well. It does a policy analysis. What are the current regulations? For example, the new GST 2.0, which got into effect last year, the new Income Tax Act, liberalization of FDI, all of that, it analyzes and then determines what impact will it have on these particular industries. Then legislative pipeline, what is happening in terms of legal bills, right? Insurance amendment bill, Shanti bill, income tax bill, electricity amendment, miles and minerals amendment bills. What are the major bills or legislations which are being discussed or which has been put into effect? And how does that, what is the current status? What is the key impact, right? On these five industries in particular. What are the infrastructure projects that our country is taking on, and which industries do these infrastructure projects help? So it does all of these sort of different multi-dimensional analysis, and only based on that it gives you the name of these five industries. Okay? And that is why I say it is so very well researched, like a proper research professional would do. And the beauty is you can go back and cross check any of these data points. And I get a lot of question about hallucination. Is hallucination real? Absolutely yes. Okay? Absolutely, absolutely, yes, hallucination is real. But what you can do to curb hallucination is something I said in the first day. Make your prompt as airtight as possible. List out all the do's, don'ts rather, to give it a proper structure. Okay. So that was how we solve, the problem of industry analysis with the help of AI. Correct? Now tell me something. Can you identify the next big sectors yourself? Rather, do you have the tool to publish your own research report? Yes. And of course, you don't have to ask me. Of course, if I'm sharing the showing you the prompt, I'll be sharing it with you at the end of the day. Yes. Did you like this prompt? Were we able to in a couple of minutes identify 5 industries which have the highest growth potential based on thorough research, multidimensional research? Okay. Have we been able to solve the first problem at hand, which is industry identification, that with the help of AI? Can I have a number one in the chat? Yes. One. Perfect. Perfect. Okay. Now, tell me, let's move on. And I want to ask you another question. Now that you have identified the industries, can you go pick any industry and analyze it in detail to identify the strong stocks from the weak ones? Is it possible for you to do that? Can you go through these industries, figure out which are the strong companies, figure out which are the weaker companies, analyze this industry in detail? Difficult, right? Difficult. But where there is a difficulty, there is a way to solve this problem, right? We will be using ChatGPT. Again, as I said, ChatGPT is great at doing advanced reasoning. Okay. Now, what is the problem at hand? So, for example, let's take renewable energy. You need to be an expert in this renewable energy, right? You need to be an expert on renewable energy, and you need to know what are the companies operating within this renewable energy space, which are the companies which are the companies that are doing good, which are the companies which are not doing good, which are the companies which have growth potential, which are the companies which do not have growth potential, right? Correct. So you need to look at it that way. Okay. But how do you do that? So this time around, as I said, we'll be using ChatGPT. So in ChatGPT, we have built a custom GPT which does exactly that. You give it any industry and it will do you an expert level analysis on that industry and identify the strong stocks and the weak stocks. Okay. So I will use the most thinking model. Okay. And how do you use this? There is no prompt. It has been trained on this. Okay. All you need to do is enter the name of the industry. So, for example, you can do this for all the 5 industries. Let us take the first one and show how you can proceed with one industry at a time. So, let's take renewable energy industry, right? I can go and put Indian renewable energy industry. Just type in the industry name and it will give you the output. If you want to do, let's say, next, if you want to do electronics manufacturing, just type in electronics manufacturing. If you want to do pharmaceuticals, type in pharmaceuticals. If you want to do fintech, type in fintech. If you want to do infrastructure, type in infrastructure. Just type in the industry name and we'll do it for you. Yes, I'll be sharing this custom GPT. You can use it for absolutely free. Okay, you don't need a paid plan for this. Once you do that, make sure you have the latest, most thinking model and hit enter. It will take a couple of minutes and it will give you a mind blowing analysis, which let me show that to you. Okay. So I just ran it before the session. It thought for approximately 2 minutes and I entered the exact same prompt. Okay. What does it say? Comprehensive top down Indian renewable energy industry analysis and stock selection. Okay. So it tells you what is happening in the renewable energy space. Let's discard it for the moment. What are the rates and liquidity? For those of you who like to stick to the point, it goes through the top 20 or the biggest 20 companies in the renewable energy space and then analyzes these 20 companies and tells you which are the best three contenders. Okay, which are the strongest three stocks in this space. On your screen, can you see the name of three stocks which are the strongest as of today in this particular space? Tata Power, Vari Energies, and IRDA, right? Then it is important to know your friends. There's a saying, right? Keep your friends close, keep your enemies closer. What does it mean? That you should know what can harm you as well. Know what is good for you, know what can harm you as well. At the moment, it tells you which are the stocks which are not doing that great. So you can stay away from them at the moment. Which are they? Sterling and Wilson, Borosil Renewables, and Orient Green Power. Okay. Does, if you are somebody who likes to stick to the point and move on, has this solved your problem already? Has it drilled down this particular industry chosen and given you the name of three stocks? But if you're somebody like me who needs to be convinced and does not take an answer on the face value, they need to go, and I do it, right? I will go into detail, understand it, and only then believe it. If you're somebody like me, you are in for a treat. Again, it goes and looks into the industry into detail. What are the growth inflation policy rates and how is it affecting the renewable energy space? What are the electricity demands, peaks, system reliability, and how is the industry performing around these particular pillars? What is the government spending in this space? Are they adding infrastructure? Right? What is happening in the space in terms of macroeconomics? Okay. Second, it looks into a little more in depth. Okay. It looks at what is the total installed base, additions, segment mix, right? This can be a little technical for a few of you, but just read it and you will understand how important and mind blowing this is. Regulatory landscape, what is it in this particular space? Okay. What are the supply chain and technology conditions in this space? What are the sector specific challenges, right? Are there any execution bottlenecks? Okay. Who is there tender driven pricing pressure? Okay. Again, all of these energy things are done by tenders, right? There are energy tenders which are given out contracts. Okay. What is the governance like? And after all of that, right, doing all that analysis, it goes to the top 20 and then filters out the best three at the moment for you. And best three is not arbitrarily. So, for example, it says Tata Power. It has integrated utility. It has a scaled renewable energy platform. And it tells you why Tata Power. It tells you the important metrics and it also tells you what could drive upside concisely. Okay. Same for Vani Energies, domestic manufacturing scale plus strong profitability. Okay. Why Vari? What are its financials? What are the key metrics? And what could drive upside? Okay. Same for IRDA. And not just for the stocks which are good, it also tells you which are the stocks which are underperforming at the moment. So you know that these are the stocks that you should stay away from. Okay, Sterling and Wilson, Borosil, and Orient Power. Now, is this within 2 minutes, and this will take another 2 minutes? Have you been able to go from identifying good industries to identifying the top three stocks within any industry? Just type in the industry name, and you will get three stocks like this. You can do so for same for electronics, pharmaceuticals, fintech, and infrastructure. Is that not powerful? Does this not give you immense power in your hands? Yes, even if you did not do this in a professional capacity, or let's say you're not educated in this, it helps you do a lot of heavy lifting for you, right? Now, tell me something. Tell me something now. Can you have high quality knowledge on any industry in under a minute? You have your very own AI tool for this. Now, is this only for small cap? No, I'm telling you how you can use AI to do your research work, right? It can be for large caps, it can be for small caps. Yes, I know I was going through this small cap checklist. Think of it as a mechanism or a medium of how you carry out these tools or these checklists, right? Okay. So, have you been able to solve the second problem with the help of AI, which is to analyze the industries in detail and generate stock ideas from them? Yes. Can I have a two in the chat? Perfect. Perfect. Now, tell me something. Okay. How accurately can you compare multiple stocks and identify the perfect stock? For example, you just found out the three stocks. Okay. How confidently can you pick who's the best from among Startup Power, Vari Energies, and IIT? Is it easy? Difficult, right? And I'll tell you, this is where majority of the people, and I will be confident enough to say, and you might not like me for it, all of you will go wrong. And I have seen this categorically that you might think that Rahul sir, no, how can you say I'm going wrong? I'm opening screener, I'm looking at P, PB, PS, EV, EBITDA multiples, I'm looking at comparing it with peers. I'm doing all of that. I'll also open trading view and look at the price chart as well. I'm doing so much. How can you say that I'm still wrong? That is still not enough to do a proper professional grade company comparison. And I have seen people do all of this, correct? Think that they have done it, and at the end, they resort to guesswork. For example, if I ask you which is a better stock, is it HDFC? Is it AU Small Finance Bank? Or is it, say, SBI Cards? Uh, And majority of you are going to say HDFC because there is a confirmation bias which happens irrespective of anything. And it can be HDFC, you don't know. But your job is not to do any sort of guesswork. You hear some stock buzzing on the 9 a.m. news for a few days, everybody's talking about it. You go and invest in it, correct? Or that will drive or place some subconscious impact in your decision making process. Now, you tell me something. Do you think when it comes to your money, you should rely on gut feeling or any biases? Or do you think it should be absolutely data backed? Absolutely quantitative research data back, and not just one dimensional, two-dimensional analysis, but multiple dimensional analysis. And that is exactly what professionals do. But the problem is, none of you know what the professionals actually do. And this is something I actually tried looking it up if there is any video on YouTube which explains what it is, what professionals do. And there is none. How many of you have heard of the term of scoring matrix analysis? Anybody? Do you know what it is? I saw a couple of people say what, yes, they have heard of it. Do you know what it is? Scoring on various parameters. Exactly correct. So, for example, for those of you who have not heard of it, if I ask you that, tell me it's a sort of decision matrix. Absolutely correct. And how does it work in our, uh, market analysis and research domain? Let me tell you how it works, right? If I ask you that identify the best student in a classroom for me, correct? Tell me how will you go about doing that? Identifying the best student in a classroom. You'll conduct an exam, correct? You'll conduct an exam and then you will see which is a student who scores the highest. But will you only conduct a maths exam or will you only conduct a physics exam? No, right? Because if you only conduct a maths exam, you'll get the best math student. If you only conduct a physics exam, you'll get the best physics student. But is that your goal? No, right? Your goal was to find the overall best student. So you conduct exams across all the subjects and see who scores the highest overall marks. That is how you determine. Now, take this logic and deploy it to, let's say, a comparison of stocks. Your job is to identify the overall best stock. The problem is when you just look at PE multiples and everything, you are looking at a stock which has the best valuation. Okay. When you're only looking at a chart, right, a price chart, you are trying to identify a stock which has the best technical parameters. But is it the overall best student in a classroom? No, right? That is where we fall out on. It is not, even if you're doing that, it is not a multi-dimensional analysis. Correct? There is a lot of qualitative as well as quantitative angles to compare companies on. But the thing, and this is exactly what we call as the scoring matrix framework in the financial domain, right? This is what we do. So even if I remember in my private equities days, we would get something called as a screening list, correct? So it is a potential, let's say, if a private equity player is trying to uh, invest in a dental chain, we'll get a screening list of all the small dental companies, right? And we don't even need to know the name. We will mark them as in a serial number, company 1, 2, 3, 4, 5, 6, 7, 8. Okay. And we will have all the financials and everything, coverage, qualitative insights. And we don't even need to know the name of the company. We can go ahead and do the analysis based on the details that we have got, the financials, the qualitatives, everything. You can blindfold us, do not tell us the company name, and we won't even be biased. And that is exactly what we want to do. So how we do that? We will be using Grok to solve this problem, because there will be a lot of parallel analysis that happens. Remember, we are conducting multiple exams at the same time. And I already said that Grok is doing great at doing multi-level analysis together. Okay, let's see how we can use Grok. And by the way, this is going to be really amazing. I'm sure none of you have seen anything like this. Can I have an excited in the chat? I think the excitement has gone down a little. Okay, done. Perfect. Okay. So, coming to Grok, okay. So, for this, we will be using a prompt. Okay. So, over here, I have just a second. I have SpringPad's company comparison deep research prompt. Okay. It's a 14-page prompt. I'm not sure if you can see. Yes, it's a 14-page prompt. All you need to do is copy the entire thing. Okay. Go to Grok, paste it, go to the top. Over here, you will see a input area where you can enter the names of the three stocks. So what are the three stocks? Let's go back. Tata Power, Vari Energies, IRDA. So you enter the name of these three stocks that you want to compare. Tata Power, Vari Energies, and IRDA. Also, because it's a smart analysis, right? Enter your name as well so that you can show off in front of your friends. Okay. So you hit enter. This also takes a little bit of time. It takes 2, 3 minutes. Even though Grok is very fast, it still takes 2, 3 minutes. I ran this analysis beforehand. Now, okay, so the prompt is big enough in itself. Just a second. Yes. On your screen. And by the way, I don't know why, usually it gets formatting absolutely correct, but whenever it's doing a deep thinking mode, it messes up formatting sometimes. That is fine. Okay. Can you see a sort of report card in front of you? On the left, there are 6 different subjects. On the right, at the top, you have the 3 different companies. Maximum score being out of 5 for every subject. So if there are 6 subjects, what is the total score? 6 into 5, 30, right? So you get a total score out of 30 as well. What are the 6 subjects? And this is what I call as multidimensional, right? Truly multidimensional. Fundamental analysis, financial analysis, company performance, outlook, technical analysis, and valuation. Correct? For example, in valuation, Tata Power scores 3 on 5, Vari scores 4 on 5, IRDA scores 5 on 5. Correct? For, let's say, financial analysis, Tata Power scores 5 on 5, Vari scores 4 on 5, IRDA 3 on 5. So you get how the working happens. Can you, looking at this, tell me that overall, based on this research, which is the better company? This is what we call as a scoring matrix. Tata Power. Is this amazing? Yes. What is truly more amazing is how to come at this answer, right? So For each and every subject, it gives a thorough performance analysis of every company. It's like for every subject, the teacher is giving a review article for every student. Fundamental analysis, what is happening with Tata Power, right? What are the core business and competitive positioning? What are the recent developments? What are analysts saying about Tata Power? Okay, that is professional analysts. Same for Vari Energies, same for IRDA. Now, based on this, if you go through this, you will understand why a particular score has been given in this manner. Okay. Okay. So fundamental analysis, if it is 5 on 5 for Tata, if it is 4 on 5 for Wari, if it is 3 on 5 for IIDA, you will be able to understand what is changing when we're talking about fundamental analysis across these three. Financial analysis, right? What are the different metrics? The most important income statement, balance sheet, cash flow, the ratios, all of them are taken into consideration over here. In simple English, it tells you what is happening. For Tata Power, strong ROE revenue growth indicates efficient operations and expansion, moderate debt to equity with high dividend growth. Okay. Same what is happening for Avari, what is happening for IRD. Third, it looks at company performance, third subject. Now, this also, it looks at multiple different things under company performance, right? How has the stock price performed for all these three stocks? How has these stock price performed relative to its historical performance? Okay. Now, Tata Power has maintained steady growth above its 5-year average, driven by renewables. Vari shows strong post IPO gains, and IID underperformed due to market volatility. How, then it analyzes the stock price performance relative to industry benchmark. It analyzes it relative to management's forecast. This is very, very important. If you look at, you know, reports, quarterly reports, you will see that a very big job management has is to forecast what is going to happen in the next quarter. Correct? And if management is relatively close, and analysts have more conviction to what management is saying for the future as well. So it does a relative to management's forecast analysis for Tata Power, Vari, and IDA. And it also checks how it has performed as an investment vehicle for investors. Then fourth subject, what is the outlook? What are the growth projections? Okay, so for Tata Power, Vari, and IDA, it checks first what are the growth projections. What are the opportunities? What are management's forecasts? What are macroeconomic and regulatory conditions? And what are the potential risks? Do you see how detailed it is? For every subject, there are subtopics that it is comparing on as well. Okay. Then we move on to technical analysis, something that all of you love to do. What does it technically say about Tata Power, Vari, and IIDA? Okay. Stock in uptrend, above 50-day average, RSI at 65. So it does that for you as well. Valuation, all of you who open up Screener and look at the multiples, P, PB, EV, beta based valuation for all three, explains in simple English. And Tata Power has a premium valuation, but it is warranted. IRDA discount, tempting but risky. Vari fair to for growth. So does all of that analysis, and based now, if you go through the analysis of each and every industry, you will be able to understand why in a particular subject these three stocks have been scored as such. And then you will have more conviction and understanding as to why we have got such totals across 30. Now tell me something, does it not feel like a very data backed, structured approach to comparing companies rather than having fragmented views? Or rather than relying on, it takes away all the guesswork, right? Is this not absolutely, absolutely mind blowing? Drop in an MB in the chat. Yes. Now, can you confidently, unbiasedly, and independently compare companies in depth, backed by data and analysis? Yes. Superb. Have you been able to solve the third step, which is to compare companies with the help of AI? Can I have a 3 in the chat? Of course, I'll be sharing the prompt, guys. I'll be sharing all the prompts, the custom GPTs, screeners, everything at the end of today's workshop. Okay. But is our job done? We have come to step 3, but is our job done? No, right? That brings me to my next question. Can you confidently tell if you're investing at the correct price? Even if you have identified the correct stock, it's very, very difficult to identify the correct price, right? You might think, you know what, tomorrow I'll get a better price. And then tomorrow price goes up. So you'd never really know whether the right price was yesterday, today, or is it going to be tomorrow. Correct? Now, how do we solve this problem? For what analysts do in such a case is they will there is something that we do call a financial model, right? An equity research model wherein we will have 60, 70 tabs. We will build the entire financial model. We will do multiple different ways of trying to arrive at the value of a company. And then we will try and make a assumption or a realistic educated guess as to what should be the price of that company. Correct? Now, of course, all of you are not equity specialists or valuation specialists, and hence we will be taking the help of Cloud, right? Because it's hands down the best at data analysis and modeling. What are we trying to achieve? Let me give you a glimpse. Remember on day one, I was telling you how you can take all of these professional analysts' recommendation and create a probabilistic view. Remember, that is something that we did in day one. Yes, correct. Now, how do these reports actually look like? We did not do that in day one. So, for example, let me show you. So, this is ICICI Direct's report on Adani ports, okay, after the recent earnings. So, there is a buy, sell, hold rating. As you can see over here, this is it's a buy. Now, the current price as of this report date was 1,567. And ICICI said that based on their research, they feel that the target price of Adani Power Ports should be 1950 rupees, which is a 24% upside potential. Remember, we were doing all of this upside potential, consensus target. Yes. So, this is how the reports actually look like. Or let's say this is Axis Direct's report on SBI life insurance. As of the report date, the current price, just a second, the current price was 2053 rupees, and they said that the target price is 2450, which is approximately a 20%, 19-20% upside. Now, this is how the reports actually look like. But as you can see, it's a lot of, you know, typical corporate jargon, financial jargon, and a lot of numbers. Do you think it looks easy to understand just having so much data points? But again, this is something which is fascinating, right? Being able to identify a target price, being able to identify where the price can go from here, what is the intrinsic value of the stock. And that is exactly what we'll be doing with the help of Claude. And this time around, I'll be telling you about another prompt that we have, which is again a 14-page prompt. And it's SpringPad's comprehensive stock analysis prompt. What you need to do, copy it. Why is this prompt long? Because I have exactly taught it what are the different things I wanted to analyze in my equity research report, how to go about that analysis, how to go about the valuation. I have detailed each and everything. That is why it is a long prompt, and I have also given it how I want the sample output to look like. Okay. So you copy paste the prompt and you enter the name of the stock. What is it in our case? It is Tata Power. And then you also type in the author name. Okay. Because all these players, they type in their name, we will also type in our name. Okay. If you have Sonnet 4.5, use that. If you have Opus 4.6, the latest one, you can use that as well. And you hit enter. Now, this will take a little bit of time. Okay. I have run this for you in the meantime. So over here, you can see I copy pasted the same prompt, did this. It did the analysis, gave me a report, and so this is how the report looks like. Okay. And believe me, this is by far one of the most wonderful things that I have been able to do with AI. And I have been using a lot of AI in the markets over the last 2 years or so, right? Even if you don't know what Tata Power does, even if you're absolutely new, right? If you read this, okay, what does Tata Power do? You will be more knowledgeable on Tata Power than 99% other people. That's it. And we have not gone to the, best bits itself. This is like a proper report. Do you see a target price, horizon, and recommendation? You get that as well. Does it mean that, what, this is target price 500, this is written in stone? No. Treat it as indicative, right? What is more important is the research or the procedure by which you are arriving at this, right? Why is it saying that it is a buy stock? Why is it saying that it is you know the target price is 500? Let's break it down, because that is where the real magic happens. You don't need to look at any number, you don't need to do any calculation, it does it for you. So we have a proper segment where it does all the quantitative analysis: market cap, current stock price, the PE ratio. It calculates the 5-year trend as well, and tells you what is happening, right? It analyzes the trend, identifies, lays it out in front of you, right? And it helps you understand what does the trend mean for you. So even if you're somebody who is new to the markets, right, I have curated the prompt in such a manner that will first tell you what is happening, and then help you understand what does it mean for you as an investor looking at this stock. Same goes for profitability: ROE, ROC, net profit margin, operating profit margin. Calculates all the ratios, all the growth metrics for the last 5 years, does a trend analysis, tells you what trend observations are there and what you should make of it as a analyst. For growth, it looks at revenue and EPS growth, does a 10-year, 5-year, 3-year, trailing 12-month trend analysis, tells you what the trend is, helps you understand what the trend is in simple layman English. Looks at the balance sheet, the debt to equity ratio, tells you what the trend is over the course of time, and tells you what you should make of it. Correct? So it tells you, even see how well they justify it, right? You see that the debt to equity has fallen down, it has gone up, then it has gone down. It tells that the company has demonstrated ability to raise capital through various means, including a 2000 crore NCD issued in December 2025. So it gives you context as well. The planned capex capacity of 70,000 plus crores for renewable projects will be funded through a mix of debt, internal accruals, and strategic partnerships. Correct? So it is so easy to understand as well, but it is so detailed, methodical. You don't need to do any number crunching on your own. Cash flow statement, it analyzes the cash flow from operations and helps you understand what is the trend. Okay. Right? Dividend analysis, efficiency ratios, debtor days, working capital, all of it. It does all the calculations, analyzes all the trends, and then helps you understand it in simple English. And not just valuation metrics, right? It compares with industry peers as well. For example, versus NTPC, Adani Power, JSW Energy. Okay. Where does it have relative strength? Helps you understand it in simple English. And not only quantitative, it looks as the qualitative angles as well, right? What is the business model? Right? What are the core products and services? Generation, transmission, distribution, renewable energy, new age solutions. How does Tata Power make money? Right? If you want to value a company, you need to know how is it making money? What are its competitive advantages? What is management's quality? A lot of people, you hear any of these Damanis, KDRs, they will talk about the quality of management a lot. So it does your management analysis for you. What are the growth strategy? Because the price will only keep on growing if there is growth prospects in sight. What are the expansion plans? What are the research and development initiatives? Also, it looks at the shareholding pattern analysis. A lot of you open screener or trendline to see how the shareholding patterns are changing. It helps you decode and understand that as well. What is the promoter holding? What is happening to that? Okay. What is in the institutional ownership dynamic? What is happening to that? How much is retail participation? And then, if it is a little too much for you, if you're new to the markets, it will help you understand in simple English. Okay. Then it builds an investment thesis for you. What are the key drivers for futures growth? Renewable energy trend, integrated business model advantage, new energy solution leadership, distribution business optimization, strategic partnerships, and funding access. Correct? So it discusses what are the things which are going right, what are the potential catalysts that can move the stock price up, what is its positioning within the industry, and what are the trends and challenges that it faces, right? And last but not the least, this is how it comes to an approximation of the fair value estimate of the company. And this is what we call as an SOTP valuation, or sum of the parts valuation, wherein we break down the company or a business into multiple small businesses, value each and every small business process individually based on how it is performing, and then when we add it up and try to identify the total value of a company. Why is it more sophisticated? Because let's say over here, if you see the, where did it go, how is it making money, right? Revenue stream, transmission and distribution will have a different business model than generation. Okay, than let's say distribution, than renewable energy, than traditional energy. Okay, so that is why each and every different type of business should be valued separately in a different multiple, and that is exactly what it does, and then comes at a total value of 500, right? And that is how it does it. Is it not wonderful? It gives you a rationale for recommendation as well, which is more important to understand. What are the growth opportunities? What are the investment risks that you should be cognizant of? Everything. Now, is this a report that you just see 500 and you move? No, correct? Use this 500 as an indicator and then try and understand what is it saying. And believe me, if you go through this, spend 10 minutes to understand this report, you will be a master at understanding what is happening in the company, right? Every day, if you read one research report, na, you'll be an expert on 30 stocks in under a month, right? Do you think this is powerful? Can I have a P in the chat if you think this is really, really powerful? And I would go on to say, especially because you guys are new, this is even more easier to understand than these sort of professional reports. Yes? Now, can you tell me something? Can you make informed independent analysis on the price of a stock on your own now? You can be your very own equity research specialist thanks to Claude and, of course, the prompt. And does that help us solve the fourth and the last problem in the investing life cycle with the help of AI? Yes. Yes. Now tell me something. Are you confident in your ability to independently evaluate and build an investment portfolio using a structured approach thanks to AI? Is that a promise that I made to you at the beginning? Yes. Drop in the biggest yes in the chat if you agree with it. If you think that AI can do a lot of the heavy lifting very, very smartly for you. And there was a question that I saw. I did not answer it back then because I knew I was going to come to this. What about mutual funds and AI? Right? You might be having this question as well, right? Well, you can use AI in mutual funds too. And the right mutual funds tailored to your goals can help you track, monitor, and stay disciplined with your goal based investing journey. And we will be seeing later on in the session today how you can use AI in mutual funds as well. So you do remind me. But first, let me get back to our golden checklist, a 7-part golden checklist for small cap investing. So whatever we have done now, the first checklist was to, what was it? To be able to understand sectors and analyze companies, right? Have we been able to do that with the help of AI? I have showed you an entire process of how you can analyze sectors and companies using AI. And I'll give you a pro tip as well. Always have the I am the owner of a company mindset. What do I mean by that? If you're not confident, like let's say if you only have 1 crore rupees with you, okay, if you have 1 crore rupees, that is a net worth, and you have an investment opportunity wherein you have to invest your entire money in that company. When you are faced with a situation like this, that sab kuch daw pe laga do, correct? That which we'll call in Hindi. Now, you will do you will only put it in a company in which you have the maximum conviction, you have done your maximum research, and you still feel that, yes, if I have to invest all my money when I invest in a particular stock, this is the company if you I want to go for. If you don't feel the same way for any stock, even if you want to put only 500 or 1000 rupees, don't bother putting it that 500 or 1000. That means you are not confident on your analysis. And this mindset, right? I am the owner of a company, right? I'll put all my money in a business. If you cannot do that convincingly for a particular stock, then don't do it partly as well. That means you are not convinced enough. And if you have this mentality, this will help you weed out 90% of bad investments. Why? Because the simple logic being, if your money is at risk, you will make sure that you look under every nook and crevice to search for more and more details on it. And only then, after you have done thorough analysis, will you go and take up an opportunity. Correct? Does that make sense? Yes. Only if you are confident about a company to invest all of your money into it, have that I am a owner of the company mindset, only then should you put even a small amount of money in that particular company. Now, tell me something. What do you think is the job of a company? Okay. So, any stock, let's say in the market, what do you think is the job of that particular business or that company? To make business, make shareholder richer, earn profits. Okay. Profit, products and profit grow, generate revenue, do business to grow. How many of you think that the job of the company is to make profits? The job of the company is not to make profits. The job of the company is to increase profits. Is to increase profits. Correct? Why do I say that? Why do I say that? Let's look at an example, right? Let's look at an example. Let's go to screener. Okay. And let's look at Tata Consultancy Services. Okay. Now, let's look at the P&L, okay, of Tata TCS. What is the profit in 2014? 19,000 crores. Okay. It is profitable, but what has it done? 2015, 20,000 crores. 2016, 24,000 crores. 2017, 26,000 crores. 2018, 25,000 crores. 2019, 31. 2020, 32. 2021, 32. Okay, you can see, right? 38, 42, 46, 48, 47. What is it doing? Over the course of time, it has gradually kept on increasing its profit, right? And does it show in the price of the stock as well? Let's go back 2014. Profit increasing, price increasing, profit increasing, price increasing. So do you see that trend? Not just for this. Let's look at other stocks as well. Asian Paints. Okay. Let's look at the P&L. Net profit. Okay. 1200, 1400, 1800, 2000, 2100, 2200, 2700, 3200. A small dip, 3000, 4000, 5500. Then again, there's a dip. But if I look at here, right, it has been on a continuous uprise. Okay. If I just leave out the last year, what has happened to the stock price as well? It has increased because only if you are, you know, I'll come to this concept later. Let's say a company is making 1 rupee of profit for every 10 rupee of sales, and you paid 100 rupees for that company. Okay. Next year, okay, will somebody pay 20 rupees for that company if it is still making 1 rupee of profit? You just paid 10 rupees, right? Why will the other person pay 20 rupees for 1 rupee of profit? They will pay 20 rupees when the company is making 2 rupees of profit, right? And that is how the stock price should increase. That increase in profit reflects in the price of the stock. Okay. And that if you want the stock price to continue growing, you have to look for an increase in the profits as well. Profits should also grow. Correct? So, what is the second thing that I want you to learn? The job of the company is to increase profits, and that is exactly what we call as the second checklist. Always look for a profit trend. By the way, guys, if I look at Asian Paints, right? What happened? Somebody got this observation absolutely correct. Like 2025 and even in the current year, there was a sudden drop in profits. Okay. What happened to the stock price? Birla, Opus, all of that. What happened to the stock price? The moment that there was pressure started mounting on the profit drop in profits, right? What happened to the price? Did it reflect in the stock price as well? Exactly that. So our job is always to look for, say it with me 3 times. Don't look for anything fancy. Are a loss making company, let's see. Don't need to. Just be disciplined enough to look for profit upturn. That is the second golden checklist that I want to share with you. For example, right? If you go back, take a look at RMC switchgears, 2 lakhs invested in RMC switchgears would have turned into 60 lakhs in 3 years, right? Okay. So that was checklist number one. Number two. Okay. Now, the third checklist I want to share with you is stay away from loss making companies. How many of you think it's okay? You know what? They are burning cash, they're making losses, they're taking more and more capital. They will turn it around. It's a common thing, right? That we see. But you have so many options to choose from. Why do you need to? Why is there a significant need for you to go and take that risk in a loss making company? Right? Does it? Because people always go based on hearsay. Correct? So, for example, let's look at this, right? Let's look at Ola. Okay. What happened to Ola? Did an IPO, amazing IPO. Okay. Stock price never really recovered from there. Why? Let's look at profit and loss. Okay. What happened? Where did the P&L go? Loss, loss, more loss, even more loss. So, did it reflect in the price of the stock as well? Did it reflect in the price of the stock? Absolutely yes, right? Promoters got out. Okay? They shifted the bag in your hand. I will not say what bag it is, but you're smart enough to understand. They shifted the bag to your hand, cashed out, and then company kept on making losses. Right? What about Paytm? Uh, just a second. What about Paytm? Right? Let's look at it. IPO'd, stock price till date hasn't been able to come back to that level. Why? Let's look at profit and loss. Minus 300, minus 1500, minus 4000, minus 3000, minus 1700, minus 2400. If it is continuously in losses, believe me, it reflects in the price of a stock. Can we see that? Now, does it mean that, be it, or let's say, let's take a look at another example, which all of us know. Vodafone Idea, right? Vodafone, one of the biggest names, Airtel, Vodafone. What happened to them? Let's take a look at this, right? Doing very, very good. 2014, sir, what happened? Look at this. Profitable, more profitable. Okay, profits decline. loss making, even more loss making, more losses, more losses, more losses, more losses, more losses, endless. And what happened as a result? The market sees this, right? From a profitable company, if you turn into loss making, what happens to the price of the stock? All the way from 120, 110 odd levels, it is now at still, even after in the next 12 years, it is still below 20 rupees. So tell me something. Is it worth the risk? Even though no matter how much some analyst in a news channel is romanticizing this particular stock, that great business, burning cash, they're saying, oh, go burn cash. Does it make sense? Do you, as an investor who has so many options, do you need to risk it? No, right? Am I saying that Ola, Vodafone, or Paytm will never turn it around? As a matter of fact, Paytm has started turning it around once they started this loans business, right? This financing business. So they have been able to turn around their fortunes, but they're still at a price below what they were. They're still loss making, right? Do you need to risk it? Do you need to take the risk and see whether a loss making company can actually go and turn profitable? You don't need to risk it because you are operating in a market which has where you have access to more than a few hundred good companies to look at. Correct? So stay away from loss making companies is the third checklist that I want to share with you. Okay. Then, before I tell you what the fourth checklist is, I want to tell you about the three different types of stocks, right? From a consumer standpoint, what are the three different types of stocks? Siddharthji, I'll come to that. Okay. So we have evergreen stocks. Okay. What do I mean by evergreen stocks? Like look at the DMarts, Zomato, Britannia. There is everlasting demand, right? Around the year, there is demand for these products. That is why we call them evergreen stocks. Okay? Do people visit DMart less, let's say summer versus winter? No. They will require the rations no matter what month in the year it is. Do people eat less biscuits or more biscuits in a particular month? No. It is evergreen. There is demand for this product throughout the year. Then we have seasonal stocks like Pepsi, Maneuver. So, for example, when do you have more Pepsi? In winters, right? Summers, okay. When do you think Maneuver makes more sales? In July or in December? Wedding season, festive season, correct? So, these are the two different types of stocks. And now, I'll tell you one thing, okay? Before I tell you what commodity stocks are, let's look at something. Let's look at DMart, okay? Avenue Supermarts. Let's look at the price chart and let's look at the profit and loss, okay? How much sales and how much profit? Can you see that it is more or less, there is a structure to it? Profits are more or less increasing at a stable rate or a same predictable rate, and there are sales are also increasing at a stable growing predictable rate. Let's look at quarterly. Okay, every 4 months, do you see there is any sort of discrepancy or is it uniform? It's uniform, right? It's pretty uniform, correct? Now let's look at Britannia as well. So you see that there is a demand continuously. There is the same sort of demand continuously for these stocks. For example, over here, sales of Britannia, right? More or less uniform across all the months. But this is why they are called as evergreen stocks. Now, let's come and look at, let's say, Vedant Fashions, okay? Manyavar. Now look at this. This is the quarterly P&L. What do you see? Okay, let's look at this. December 220 crores, March 166, June 148, September quarter, which is July, August, September, right? September quarter 93. And you will see this trend year in and year out. December and March quarters, that is basically from October to March, festive season, wedding season, the numbers are high, right? And after that, from April to August or September-ish, you will see that it is relatively lower than December and March. So, is there an observable pattern? Yes, there is an observable pattern, and that is why these are called as seasonal stocks. And there, even though there is a difference month on month, it is a predictable pattern. It is a logical, predictable pattern. Okay. Now, let me tell you about the third type of stock, which is the commodity stock. Okay. So, what is a commodity? A commodity is a product wherein the brand does not matter that much, right? Would you be too concerned between the quality of petrol or the use of the type of petrol in HP, BPCL, Reliance? No, right? It's petrol at the end of the day, correct? Doesn't really matter. But if you are having biscuits, you will be, factoring in, Array, I'm having Britannia ka biscuit, I'm not having a local bakery biscuit. For example, steel. Are you really concerned whether you're getting steel from the same steel sheet from Tata or JSW? No, right? So you're not concerned with the brand. You're concerned with the commodity itself. Okay. So, for example, fertilizers, for example, steel, for example, paper, for example, petroleum products. Brand is not important. The product in itself is. Okay. And the problem with commodities is you can't predict any pattern whatsoever. And even the CEOs, like I remember, I think it was JSW's CEO, they said they cannot predict. Now, even though gold had been doing so well, the CEO comes in, if I'm forgetting the name, and he says that, even we don't know where gold is going to go to. And that is his bread and butter. He has been doing it for 40 years. And let me show that to you. Right? Let's go and take a look at Tata Steel. Okay. Let's look at their quarterly P&L. Okay. Can you see any sort of pattern? December 4,000, March 7,000, June 5,000, September 4,000, December again 6,000 this time. March this time is lower, 6,600. June higher, where last time it was lower. Okay. September again lower. There is no pattern. This is proper arbitrary. Let's look at it from a yearly angle as well. Look at the sales. Okay. And let's look at profit. Profitable 3,700 minus 3, almost 4,000, minus 500, minus 4,000, plus 17,000, plus 9,000, only 1,000, 8,000, 41,000, again back to 8,000, minus 5,000. Can you predict? Is there any sort of analysis that you can do from this? How many of you knew this, by the way? No, right? Let's look at JK paper. Again, paper commodity, right? Let's look at this. Let's look at the results. 300, 200, 300, 306, 236, 279. There is no consistency. Let's look at it on an annualized basis. Negative, loss, loss, profit, 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 again loss, profit. There is no tandem. It goes to 1,200, comes back down to 400. Correct? And that is exactly what the problem is with these types of commodity stocks. There is no predictability. And where there is no predictability, anything can happen. Do you think it is prudent for you to be invested in this type of stock when there is so many more options out there? Go for patterns, go for predictability, right? You need that smoothness in your investment journey. And for example, like 2 lakhs in alkaline mines would have turned into 1 lakh in 3 years. Again, what is this stock? It is a commodity stock. Everybody was talking about alkaline mines. It would have gone down by 50%. And why? Did alkaline amines change as a business? No, it is just that the commodity that they were dealing in, there was a lot of problem with China, Chinese imports, this, that, and it had a direct impact on the business. These are not driven by the brand, these are driven by the global dynamics of the commodity at hand. So it is very, very unpredictable. Got it? So the fourth checklist that I'm going to give you is stay away from commodity stocks. Drop it in the chat. You also type it down. And I know a lot of you are looking into commodity stocks a lot. Stay away from commodity stocks if you are doing it as a long term investment. Okay, it's okay to capitalize on movements here and there. It is okay to trade, but as an investment, my recommendation would be to stay away from it. Okay. Now, what's the next thing that I want to talk to you about? It is the price of a stock. Okay, it is the price of a stock. Now, for example, if you want to have French fries in monsoon and you see that there's a vendor outside your house, right? He's selling potatoes for 2000 rupees a kg instead of 50. No matter how much you want to have French fries, will you buy that 2000 rupee potato? No, right? Because we as Indians, we are value conscious. But unfortunately, we're not value conscious when it comes to stocks. Now, Marwari people, they have a funda. They say that when they enter a business, they have a funda. I'm forgetting what what the sentence is in Marwari, but the logic is that within 1,000 days, the money invested in that business should be recoverable, should be recovered, right? If there is any Marwari friend over here who notes the exact sentence, you can let us know. But the logic is that when they're investing in a business, they expect that within 1,000 days, they will recover the investment. Okay? Now, the thing is, for stocks, what happens is they tend to go for a higher time frame because they are not involved in the business directly. Now, how does this work? The logic is, if, as I said, if a business, right, is making, for example, 10 rupees of profit, okay, and you are paying 100 rupees to buy that business, in how many years are you going to recover your investment? In how many years? 10 years, correct? Okay, that is one way to look at it. Or another way to look at it is you are paying 100 rupees for 10 rupees worth of profit, or you are paying 10 rupees per unit of profit. Yes or no? These are the two different ways that you can look at it. Correct? And that is exactly what we call as the PE ratio. How much money are you paying for a particular, unit of profit? Correct? So in our example, we are paying 10 rupees for a unit of profit, 100 rupees for 10 rupees of profit, correct? So what is the PE ratio? 10, correct? 100 divided by 10. So 10 rupees per unit of profit. Or another way, because profit is, we are thinking of profit annually, right? So 1 rupee in a year is the profit. So you're paying 10 rupees for yearly profit of 1 rupee. Now, let's look at Eternal, which is Zomato. What is the PE? What is the P? 1185. How do you get P? You get the earnings per share and the stock price per share. 284 you are paying. You are paying 284 for an earning per share of 0.24. So you are paying 1185 times for 1 rupee of profit. Or your investment, another way, as I said, to look at it is you will recover your investment in 1185 years. So, do you think it's good? Do you think that your Marwari friend will be very happy when they see that instead of 3 years, it is 1185 years? No, right? And that is why I say you should stay away from high PE companies. But, but, but there is a problem. Okay. Let's look at two different examples. Let's look at CDSL. Okay. What is the PE? 58.4. Okay. So it's high. Okay. But let's look at another data point and then move on. What is the growth, profit growth in the last 10 years? Average profit growth? 31%. Okay. So all of you just remember this. Okay. 58 PE, 31% profit growth. Let's look at another company. IOCL, Indian Oil Corporation. What is the PE? Only 6.9. 7. पकड़ लेते हैं, ठीक है? 7 is the P. What is the profit growth in the last 5 years? 12%. What was it in terms of for CDSL? 58 and 31 growth, 58 PE, 31 growth. This is 7 PE, 12 growth. Now tell me something. If I just look at the PE for these two companies and I say, you know what, IOCL PE is only 7, right? CDSL is 58. That means by default, IOCL is a good company, is a better company. Does that make sense? Or does the second data point that we look at also make sense? You will be willing to pay a little more when you're buying a business if that business has more growth, correct? Is it not so? Correct. So how do we factor in the growth aspect? We understood how important PE is. How do we factor in the growth aspect as well? Correct? Because then what do we mean? This is not an apples to apples comparison, right? Because the growth rate of growth is different, how much you pay for a particular rupee of profit, right? How much you pay for a company should also be different. So P in that sense, we cannot use it as an individual metric to compare companies, right? Because the growth rates are different, we cannot just take the help of P. So what do? We take the help of something and we do an app to make sure that we do an apples to apples comparison. We normalize growth as well, right? We factor in the growth aspect as well. And that is what we call as the PEG ratio. Now we will be able to do adjusted for growth rate. We will be able to get the P ratio adjusted for growth rate. And that is exactly what we want. Correct? So that we are able to compare better. We are taking the growth into the equation itself. Yes. And this is the formula. P, just divide the P by the profit growth. Okay. So for example, if I go to IOCL, where is it? Okay. So let me add a ratio. The PEG ratio for CDSL is 3.04, right? And for IOCL, it is negative because the earnings has become negative. But this is a normalization metric, and you should always remember this. For PE, if PE is less than 10, market does not expect any growth, right? IOCL commodity stock market does not expect a lot of growth. That is why P is less than 10. If P is between 10 and 30, market expects moderate growth. If it is between 30 and 60, market expects high growth. And if it is greater than 60, market expects very, very high growth, right? So this is P. But now you need to factor in the PEG ratio as well, correct? So high P, high growth is risky. That means you're paying a lot of money, correct? Growth is also high, that is risky. You want the PE to be low and you want the growth to be high. So what is the PEG ratio in this case? Low PE, high growth, it is much lower, right? That is where you have multi-bagger opportunities. If the PE is low and the growth is also low, no one cares about these stocks because Yes, sasta hai. But what will you do with something which is sasta, which has no growth potential at all? That is a problem. And when the P is high, it is expensive, but it has no growth. That is a disaster. So where do we want to operate in? We want to operate where it is relatively cheaper, but it has a good growth potential. So this is our territory. So that brings me to my fifth point. Always invest in low PE, high growth stocks. Okay, right? Low PE, high growth. Repeat after me. Drop it in the chat so that you never forget. Low PE, high growth. Manish, I'll take that towards the end. Okay. Low PE, high growth. For example, as a classic example of low PE, high growth is PNGS Gargi fashion, right? You could go and look at this. 10 lakhs invested in PNGS turned into 1 crores in just a matter of 2 years when this, discrepancy was identified and people saw the opportunity. And you know what? We have discussed across these five checklists, right? Across the first five pointers, what have we been focusing on is what are the different stocks, what are the key features that we should look for when we are trying to enter a stock. Correct? Doing a sectoral analysis, looking for a profit uptrend, making sure that we do not enter into loss making stocks, correct? And we saw everything with examples, staying away from commodity stocks and always trying to invest in low PE and high growth stocks. So these are all entry criteria. But what we need to also understand is when to exit, correct? For example, when do you exit? Okay. For example, should you exit when the price of a stock falls? No, right? For example, you would have heard of Vijay Kedia's story about Serra. Serra went on to fall by more than 50% and he did not sell. Because why? He said that fundamentally the business is doing the same as how it was performing, but only the stock price is falling. When there is no reason for the stock price to fall, the business is still doing as good as it was. You stick to your investment thesis. That is what happens in a small cap stock. And he held on to that, and the rest is history. We talked about Rakesh Jhunjhunwala, right? After he entered into Titan in the recent few years, Titan stock went down by 60%. There was no fundamental change in business or growth prospects of Titan. It's just that the stock price went down by 16%. 60%, sorry. So, does it mean that you exit when the prices fall? No. Especially when it comes to small cap stocks, there is a lot, do expect a lot of volatility. 30-40% correction is very normal, right? Because what did I say? The volatility is very high when it comes to small cap stocks. So when should you exit? When you see a sudden drop in profits that management cannot explain as a one-off scenario, right? Management will say that it's not one of, there are macro headwinds, there are regulatory challenges. Whenever you see that there is a sudden drop of profits, that says that something in the business is actually changing. Management cannot justify it, right? That is when you exit. For example, we saw the example of Asian Paints, right? Did we not? Correct? The moment Asian Paints stock price, the profit started falling, it started going down. We saw it with Vodafone as well. It was profitable, it was big, it was profitable, stock price kept on going up. The moment it started making losses and more losses, correct? What happened? It started falling as well. Let's look at an example. PC Jewelers, right? Stock price peaking, and then nothing. Okay, let's look at it. Profitable, and all of a sudden, single digit profits to losses. What happened to the stock price in this period? Dead, nothing. The moment it started recovering and back into profitability, then we saw the upside. Got it? So what do I say? When should you exit? Tell me, type it in the chat. When should you exit? Unexplainable sudden drop in profit. Okay. If it is a one time thing, then okay, give it the benefit of doubt. But if it is fundamental to the business, exit. You will find other opportunities. And last but not the least, the most important thing is diversification. I want you to understand that when it comes to the small cap space, understand this, when it comes to the small cap space, right? Even though a business is very good as of today, it's a small business, very good as of today, it might not be able to, survive as a bigger business. And it is very, very normal that it cannot grow, right? And that is why diversification is very, very important in these businesses. As I said, right, we only remember the titans and the Seras for Rakesh Jhunjhunwala's and Vijay Kedias. We don't remember the other companies which they ended up making a loss in. But that is absolutely fine. That is the process. And for example, take a look at this, right? If you had to invest a total of 100 rupees in a small cap portfolio and across five stocks, correct? It can so happen that your 20 rupees of 100 goes to zero. 30 rupees becomes just double. Okay, in 5 years, which is not too great. 30 rupees becomes 4x in 5 years. 10 rupees becomes 100x in 5 years, right? And another 10 rupees becomes a true proper, multi-bagger and becomes 200x. So even though this 20 rupees is only making majority of the return and you have that, 20% of your portfolio is going to zero, that's absolutely fine. You do your thorough research, you pick quality companies, even quality companies can fail. So you cannot do anything about it, right? But look at this. If you're able to diversify your portfolio, you will have a few stocks which give you decent returns. Will have a few stocks which will give you losses. You will have a few stocks which will give you profits. All that is important is you just need one or two to give abnormal returns, right? Do diligent analysis, and overall, your small cap portfolio will generate returns. Of course, it is risky. Of course, it is unpredictable. But over the course of time, if you do proper analysis, this is how, like most investors who have made money in small cap operate in. They identify very, very strong companies qualitatively, but they don't put all their eggs in one basket because they understand a business can be good when it is small, but it can face challenges when it tries to become big. Okay. So that is why diversification is important. And right, again, I'll run you through all the checklist, right? First thing is choose emerging sectors. That's the first thing. Second, only invest in profit uptrend. What was the third thing? Stay away from loss making companies. Fourth, only invest in evergreen or seasonal stocks, not cyclical commodity stocks. Okay. Buy low PE, high growth. That is the zone that we want to operate at. Sixth, exit if there is a sudden unexplained drop in profits. And last but not the least, your seventh checklist is to keep your portfolio diversified. Now, I have shared with you the 7 checklist framework that you can use for small caps. Okay? Now, how many of you can go and now do this research on your own, carry on this checklist, keep it simple? Me. Perfect, perfect. I'm happy to see that. Now tell me one more thing. How many of you still need a little bit of help screening small cap stocks? Is there anybody who needs a little bit of help screening small cap stocks? Yes? Well, I have exactly that for you. I have created a SpringPads small cap stock screener. So this is how the screener looks like. Okay. I have told it about all the important details that I want in terms of qualitative, in terms of growth, in terms of capital efficiency, everything. And it is giving me a list of stocks. Okay. As of now, it is giving me 10. How many of you are happy with this? You can now go and do the same seven checklist, and you can apply it and research these 10 companies. Sometimes it will be less than 10, sometimes it will be more than 10. Okay. Want this screener? Yes, I'll be sharing it with you. Okay. So this will be there. I'll be sharing it with you by the end of today. Correct? How many of you feel that this is going to really help you? And how many of you feel that, you know what, you're still going to have difficulty doing the seven checklist analysis, doing the qualitative analysis, even on this 10 stocks? Anybody who feels that it'll be difficult? That, okay, I'm using the screener, but still it'll be difficult for me. Still it'll be difficult. Nobody wants to do a little bit of effort also. So what? Will AI do everything for you? Well, if you want, why not? So I have created a small prompt which will help you, you know, find the correct small cap opportunity, help you do the research and analysis as well. Okay. How does it work? It works on these screener results. So let me show you, right? So this is the prompt. Okay. It's SpringPad Small Cap Opportunity Finder prompt. And where does it work? You don't need to go and look at the screener results on your own. You don't need to use it. The prompt will automatically open the screener, pull all the stocks that meet the checklist criteria, and do the research on these stocks itself and give you the answer. Does that sound amazing? You don't even have to open the screener. Yes? So over here, if you can see, the screener URL is also already mentioned in the prompt. It will in itself go run the screener, pull the data, and then research all the 10 stocks. You know what? Let me show you how it works. All you need to do, again, goes without saying, copy the entire prompt. It's a 9-page prompt. Copy it, go to Claude, paste it, and type in the URL again. Sometimes it might not be able to fetch the URL from the prompt. What you need to do is just nothing. Copy the screener link and paste it over here. That's it. And you hit enter. It will go use the screener, pull out the stocks from filtered stocks, and run the analysis. Wait, I had done this for you. Just a second. Is this the one? I don't know what happens with Claude. It just deletes my chats. Anyways, let's see this in play. Okay. So it will run, go through the screener results. It will generate, do all that analysis for you, and it identifies the top two stocks from the list. It identifies the top two qualitatively, quantitatively, everything it will do. Even if it has 20 stocks, it will give you a list of the best two stocks. That is what I have said. So it gives, what are the two? It gives Alpex Solar. So one of them is Alpex, score of 87 out of 100. It tells you why Alpex, gives you a business in two lines. What is the investment thesis? What are the key metrics? What is the competitive advantage of this particular stock? What are the growth drivers? What is its niche positioning as it's a small cap? How scalable is it? What is the quality of its financials? What is the management's quality? What is the valuation? What are the risks? What are the catalysts? How has it come to this scoring? What is its verdict? And the next thing is EPAC prefab technologies. Do we have EPAC prefab? We have EPAC over here. The second stock that it has identified is EPAC. And same analysis you get for that as well. Is this really, really helpful? Guys, be very honest. स्कैनर भी खोलने का जरूरत नहीं है. Just type in the prompt, paste the URL. It will go through the screener. It has already filtered good, strong quality stocks. And then within those filtered results also, it will give you your analysis. AI, I think at this point, we are misusing AI. If AI were a person, right? अपने से salary लेता. Yes. Screener data is accurate. It's based on, we are using filters, right? Okay. Now, so tell me, now do you understand how thoughtful stock selection can play a role in long term wealth building? Yes, do we agree to this? Have we been able to learn this in today's session? How incorrect stock choices can erode capital over time? Have we seen that as well with loss making companies, with cyclical stocks? Yes. Have we seen why structural constraints limit large institutions in small caps, but not individuals? That was the entire premise of why we were doing the small cap analysis. You do understand? Have you been able to understand all of this today? Now, if you ask me, right, there are only two rules in investing. First is allow compounding to do all the heavy lifting, give it time. Because the worst thing that we can do is we can do all the research, but if we don't give it time to play out, to materialize, it will not work out. And the second is to manage risk before chasing returns. For example, is it worth the risk to invest in a loss making company when you are having profitable profit uprise companies? It is not worth the risk, right? It is your money. Let them do their business. Let them make on more losses, take on more capital, make more losses. You do you, I'll do me, right? I'll do what makes sense for me. Wherein you have so many examples, correct? And do you agree? These are the two most important things in investing. Give it time, protect capital. Do safe, smart things. And that is the reason why most people lose their capital in the markets, right? And as a matter of fact, I've seen so many near and dear ones also lose money. First and foremost, half knowledge. Very dangerous. They will open CNBC at 9. They will subscribe to Money Control, and like that's it. Half knowledge, I am guru. Very, very difficult, because that's the worst sort of thing. Half knowledge is worse than no knowledge. And believe me, half knowledge. So there's a lot of options traders, right, who were COVID babies. Everything, they would only do option buying. And it worked for them. And they were like, Apuni Bhagwan che. And then when the markets actually saw a shift in market structure, all of their money went to nil. Correct? So half knowledge. The other thing that I have seen, Telegram, Twitter, YouTube. Please, tips agar de raha hai koi and they're sending you screenshots. See, this person has made so much money. You pay, you subscribe to our plan, you will also make money. And there is no regulation, no registration, no nothing. Run, run. These are mostly, I don't want to name anything, but I know for a fact there is a proper racket which is operated out of Gujarat, right? There is one in West Bengal as well. I think I've heard of a couple in West Bengal too. Okay? So please don't fall for this. Don't fall for this. If it sounds too good to be true, right? Making 100% returns in a month, it is too good to be true. And the last thing is not having a mentor. I think this is one thing which I have personally benefited from, a lot. I did all my education before I joined the workforce. And believe me, whatever I learned from a CFA, FRM, CIA, I learned much more when I was working on this practically. I had seniors who I could ask questions to, wherein I could go into even more detail. And you know what? Even Warren Buffett had a mentor. Does anybody remember his name? Yes. Nobody knows his name. Hmm. That's not Charlie Munger. And that's absolutely correct, Raju. That's Benjamin Graham. He has a very famous book called The Intelligent Investor as well. Correct, Harsha. And even our Rakesh Junjunwala has a mentor. What is his name? He's very much active. Radhakishan Damani. Absolutely correct. And you know what? Again, one of the learnings that I have found, right, from my mentors, because yes, of course, I have not yet spent 30 years in the markets. I've spent near about 12 years, 10, 12 years in the markets, right, from my college days. But what I have learned from my seniors and practicing professionals, right, And historically, this is very, very important for you to understand, only a small number of standout stocks have contributed disproportionately to long-term portfolio outcomes, right? And you just need a few winners, right? And this is something that entrepreneurs do as well. They will work on multiple products, they will fail multiple times, but why do they keep still push, and yet after failing yet so many times? Because they need to get it right only once. Now, of course, you need to get it right more than once when you're doing it in your portfolio, but you need to understand, especially when it comes to small caps, right? Even if 2 3 become a 50x, a 100x, it will more than make up for the ones which go to zero, correct? And there will be ones which go to zero even if you do the most thorough research with it, because as I said, it can very well be when a very strong company tries to grow and become bigger, it can fail, correct? So, and you know what, let's try and see a small cap portfolio. For example, if there is a 3000 rupee SIP that one does at an average small cap return of 30% over a time frame of 30 years, and it's only 3000, right? Maybe you choose three stocks, put 1000, 1000, 1000, right, every month in a particular year, and you let that be for the next 30 years. The total amount that one invests out of their pocket is only 10.8 lakhs. Can you guess the total amount and at the end of 30 years? Take a wild guess. Now, of course, it is mathematics, right? But that is also how small caps perform. 200 crores, 9 crores is 36.22 crores. Now you'll be thinking, Rahul sir, you are the person who taught me inflation. You're not factoring in inflation. Of course, I'll factor in inflation, right? Even after factoring inflation, it comes to 11.09 crores. Now, if you once you see this, do you really feel that you have? Do you feel, because even I get this feeling, right? That have you lost valuable time? Because I also feel, yeah, only if I could have started earlier, right? Class 5 से start कर देना चाहिए था. But no, jokes apart, everybody has this feeling, even I, correct? What's the only thing that you can do is start today. Start today and make financially responsible decisions and have a strategic framework. And if you ask me, what is the right balance, right? What do you need to do? Like, educate yourself like you have been on these 4 days, take the right financial decisions, make it an obsession. I'm telling you, make it an obsession to be financially disciplined and driven, right? It has to be an obsession, because it can't, your wealth planning or your financial planning cannot be a side quest in your life. Do you agree to that? It has to be an obsession to be financially disciplined and driven. Drop in an FDD in the chat if you absolutely agree with this. FDD, financially disciplined and driven. Right? And if you ask me what is the right balance, I would say whatever Pratik has taught you yesterday, to pursue active market opportunities, and along with that, to look forward, or rather to work toward a long-term wealth creation target. This should be the right balance. Active income, right? And long-term wealth creation. Okay? And what do you need to do to master or protect and grow your capital sustainably over time? What do you think is required? Well, let me break it down for you. First, you need to learn and you need to understand how investment decisions are evaluated using professional frameworks, right? Second, how to study small cap businesses through fundamentals and risk, like we have done today. Third, how portfolio construction, how you construct a portfolio, time a portfolio, influences long term outcomes. Fourth, how price trends and market behaviors are used to support investment decisions. So there is I don't know if you have heard of this, but there is a school of thought wherein fundamentals and technicals are used together. Some people call it fundamental, funda technicals, right? But the basic logic, techno funda, right? The basic funda, or funda again, is the logic is how price trends and market behavior, and you involve it, add it with the qualitative aspects of fundamentals, right? So you need to understand both, bring both those together, understand how taxes, structures, and cost affect your net returns. Again, very, very important, correct? And last but not the least, how to use debt, estate planning, and asset protection. Because if you're working hard to build a portfolio, correct, or create a wealth for yourself, you need to know how to safeguard it and how to protect it as well. Now, do you really think whatever I've spoken of, if can mastering these principles support disciplined long-term wealth building? Do you agree to that? Yes, absolutely. Whatever you have learned, and there's so much more to learn, correct? Now, would you like to learn AI powered investing, small cap investing, technical investing, tax mastery, estate planning, and more directly from us so that we can work together on your journey towards personal finance security? Would you love that? Drop in the biggest yes in the chat if you would love to do that. Sarup, Shirin, Venkat, Muruganji, Anup. Sorry, I can't even read out the names. It's scrolling. Navjot, Mohammed, Kamal, Sunil, Jose, Sanjeev ji, and everybody else. Apologies if I missed out on your name. Thank you for dropping in this big yes. And for all of you for dropping in this big yes, I want to introduce you to something. Now, this is called the Generational Wealth Mastery Program or the GWM program. Like Pratik introduced you to the LWB program, which was for geared towards trading, right? I want to introduce you to the GWM program, which is geared towards investing, small caps, mid caps, technicals in investing, personal finance concepts, and everything, right? Can you give me 5 minutes to take you through this program? Yes, quickly. I won't take your time, right? All of you who have said yes, I want to give this opportunity to you. This is a program that I conduct, right? So, again, to give you a blueprint, do you so tell me one thing before I tell you through the blueprint, whatever you have learned across these 4 days of FFA, do you think you could have learned it on, let's say, on YouTube, or do you find such sessions on YouTube? No, right? Because it is practical stuff. No one shares this. And most social media people are just influencers. I'm sorry to say, right? They are just influencers. That's it. They haven't managed money. They don't have professional experience. They don't understand where investors, new investors like you, get stuck and how to guide them. And that is why, me and the team of mentors, we have come up this GWM blueprint wherein we cover everything about mastering investing using AI, personal finance mastery, and also we give you expert masterclasses on additional topics as well. What is it? Majority, so it's a 3-month live coaching program with doubt solving sessions and everything. 2 months we focus on investing, correct, which is the major part of our curriculum, wherein what do? We have broken down investing into 8 modules. We have the financial analysis modules, the research modules, and the portfolio setup modules, correct? Now, we take it step by step, right from scratch to absolute advanced levels, but it is all in a chronological manner. You learn more about financial analysis, learn more about SWOT analysis, decision making analysis, comparing industries, doing macro analysis. Then you put all of that and you learn how to start building portfolios, correct? What are the different things that you need to be aware of? And then once we have done these three, we move to the different styles of investing modules. So we have growth investing, we have value investing, and we have income investing. These are different styles of investing. Growth, as the name suggests, it is geared for growth. Value, you're trying to find companies, good companies, which are available at cents on the dollar. And then you have income investing, which is basically for retired people or people who are looking to retire or want a stable flow of income. So we go through the details of each and every style of investing. We go through case studies. We go through multiple frameworks for each and every style of investing, templates or logics or strategies, if you want to call them. And then for each and every style of investing, we use AI to do it for us as well. By the way, we use AI in each and every module to actually be able to implement the programs, right? And these are all on large caps, mid caps. And then We go to specialized modules wherein we have the technical investor blueprint, wherein you bring in technical analysis to better time your investments, to better preserve your capital. So we that is what we do as techno funda or funda technical, right? We will learn about that. And last but not the least, we will learn more about small cap and mid cap investing strategies, right? So that is the entire module for your investing curriculum, the first 2 months. And then in the last month, we cover four personal finance concepts. One will be on credit card mastery, tax planning mastery, insurance planning, and retirement, wealth, and mutual fund planning. Credit cards, I think it goes without saying, once used right in a proper portfolio format, you can actually get a lot of benefits for you. Also, what are the things that you should not do with your credit card? So we have a proper credit card expert who's going to come and teach you this. Then we have a tax planning expert where we have 10 tax hacks that we give you, which will help you legally save on a lot of taxes, right? We have an insurance planning masterclass wherein you know person who has actually worked in insurance underwriting, who has created insurance products, is going to come and teach you what are the red flags in any insurance policy, what you should look for, and what you should basically avoid, right? So it's going to be a very important session from a personal finance security point of view for the entire family. That is why we have included it. Again, insurance is a very critical part of life nowadays because some of these expenses you just can't meet out of your salary or out of your savings. And last but not the least, we will help you and teach you how to build your own financial plan, your retirement plan, your post retirement plan, your mutual fund portfolios, goal based investing frameworks, absolutely personalized to you. So we'll be doing all of that. And even after this 3 months ends, we will give you access to a few exclusive masterclasses from SpringPad's exclusive masterclass series. These will be live sessions conducted by industry experts. So first will be an institutional research and investing masterclass wherein a private equity expert is going to come and teach you all about how they go about private equity and venture capital. Then we are going to have a cryptocurrency masterclass wherein you will learn essentially how to trade, invest in crypto safely, securely, and legally. What are the different considerations that you need to make? Understand what do cryptocurrency frameworks actually mean? Cut out the noise from the good, right? There are so many different things that are ongoing in the crypto on a daily basis. Most of it is noise. And how do you understand this space and invest and trade in it? Very, very important, because I think it's fair to say that crypto is here to stay. So we'll teach you to do that as well. Then we have a session on securing wealth by design. We are going to have a HNI wealth manager who just not only works with Indian clients but also works for global clients. He is working as an HNI wealth manager at one of the three biggest MNC wealth management firms in India today. It's a US based firm. He's working there and he'll teach you all about wealth structures, be it a trust, a company, how to reduce taxes, avoid freezes, simplify control, succession, asset protection, all of that he's going to teach you about it. And last but not the least, for people who are interested in bonds, right, who want a fixed income flow, we will be teaching you how to identify bonds that are worth investing in, correct? We'll teach you about duration, yield curve analysis, investment grading analysis, credit risk, escrow management. We'll also be teaching you about diversification of a bond portfolio, whether you want to go for a pooled investment versus a single named investment, and also diversifying cash flow from debt investing, right? So that you have a predictable cash flow from your debt instruments as well. And of course, it goes without saying that in this program, we're going to also give you all the AI tools and prompts bundle that we're going to use throughout each and every module of the program, and you'll continue to have access to this. And that was my 5 minutes on the program. Again, all of you who said yes, you would love to learn, I have one small promise that I want to make with you. By applying what is taught in the program, you will be able to develop a strong understanding of investing using AI, learn how investors identify high potential small cap opportunities, learn about price action in investing, explore cryptocurrency markets, gain awareness of tax efficient structuring concepts, and also understand how successful investors approach long term capital growth. That is my promise to you. I'm pretty sure because I am confident about the program that I have built. And if you think that you don't learn, correct, you don't get value or you're not able to understand, I'm confident that you go and take your 100% money back. I'm that confident about the program that I'm giving you a 100% money back policy as well, right? So I'll quickly summarize what you get. Again, all of you are asking for the price. Just give me one moment. So first and foremost, majority of the curriculum is going to be investing using AI from absolute basics to advanced levels. You have a credit card mastery workshop, which is a part of your personal finance segment of the curriculum, along with insurance mastery, tax mastery, and the wealth planning and mutual funds. Even apart from all these, after the 3 months have ended, you will get access to the SpringPad exclusive masterclass series, wherein you learn about institutional research and investing from a private equity and venture capital domain. How do they screen companies? How do they take an investment decision? As a private equity or venture VC specialist, we learn about HNI wealth management hacks, wealth protection hacks by from our Securing Wealth by Design masterclass. We'll have a cryptocurrency masterclass to help us understand how to trade and invest in crypto safely and securely and legally. And last but not the least, we'll have the bond investing masterclass, which is going to help everybody who wants a recurring and a predictable cash flow from their investment portfolio. Correct? So all of that, and for all of you asking for the price, yes, the regular price is 2,45,000 rupees, and no, you won't be paying 2,45,000 rupees. You will be paying 1,25,000 rupees plus GST. Okay? That is the price of the program. Happy, or do you want more discount? How many of you want more discount? This is too high. GWM mein to I want more discount. How many of you have already enrolled into the LWB program yesterday? You get access to GWM for absolutely free. Happy? Now, why did we do that? Because Pratik and I, as I said, we really believe that trading and investing, it should go hand in hand, right? It should go hand in hand. And there is so many of you who understand this, right? You need to have an active income source, and you need to also have a long-term plan of action to invest that active income source and actually try and generate wealth, correct, over the long period of time. Invest responsibly, smartly, and create a wealth action plan for yourself. That is why we did that. And I see so many of you said, what is LWB? Missed out yesterday. Well, and we got a lot of texts yesterday. People were facing payment issues, like they reached out to Aditya and the entire Be10X team. Can I do something? Will all of you who have already enrolled into LWB, can I ask you for a request? Can I add 20 more seats? Yes, so that everybody who has missed out on this opportunity can also join. Yes. So Nandini ji, you missed out yesterday. Add 100? No, 100 to zyada ho jayega, because we want to maintain the student to teacher ratio. All right. So, but thank you so much for allowing me to add 10 more seats. So here it is for everybody who wants to continue learning for a total price of 1,25,000 plus GST, that to split across 25 installments. You get access to both the programs LWB and GWM, one for the price of two. Sorry, two for the price of one. That is one with the other absolutely free. And also for those of you who are not aware or clear on the structure, right? 1,25,000 plus GST or 25 installments of 5,900, right? All you need to do is pay 5,900. This is one installment today. Book your seat, and for the remaining 24 installments, we will help set up a 24-month zero interest or no cost EMI for you, so that you can pay little by little over the course of 2 years and it does not become a problem for you. If you actually want to learn, go ahead and learn about trading, investing, all using AI in more detail. So the team has already rolled out the link in the chat. If you want to register now, yes, you will get access to both LWB and GWM program, right? Now is your chance. You can do it right away. Is this course for 24 months? No, we are allowing you to pay for 24 months, right? Little by little across 24 months. The course will be for 6 months, correct? 3 months of LWB, implementation and learning, 3 months of GW. And after that, we will have a few sessions as well. What will be the timing? It will be in the weekends as well, and it will not clash with your AI classes. Okay. But once you are done, can you please let me know in the chat whether you have done it or not? Done. I need to purchase this year again? No, you don't know. You know, if you already booked your seat yesterday for LWB, you don't need to purchase GWM separately. You will get GWM along with LWB itself. If you have not enrolled for any of these two programs, then now is the time you can go ahead and book your seat. Okay. Got it. Got it. Maniji, sorry, I missed out on your text. You can book your seat. So you don't need to pay 1,25,000 today. As I said, it's broken down into 25 equal parts, right? Of 5,900. You just pay 5,900 today, book your seat, and we will help you set up a 24-month or a 2-year no-cost EMI on it. Okay? Okay, done. By the way, how many of you, and I love teaching. So I'll ask this question. Did you enjoy the session that I took today and on day one? Just out of curiosity, like while all of you are booking your seat, I just wanted to ask this. Yes. Thank you. Thank you. Okay. That is lovely to see. So again, what I could teach you across these 2 days was because we had limited time, right? I could teach you only the actionable stuff, right? And there is so much more to do. But I would love for you to understand the underlying principles as well, because only looking at something on a high level, no, yes, you'll be able to do it, but you will not be able to get that conviction. And if you're somebody like me, I always ask a lot of questions since I was a child. Maybe that is why I used to love science, and I used to always ask questions like, Acha, this is horror. I did not take anything for a face value. I would ask irritatingly stupid questions. But I think that is why I have been very successful as an analyst in my professional career. Because I would take 3 hours for a 2 hours job, but I will be so thorough that nobody can cross question me on the logical reasoning of something. And I think, yes, initially it was difficult to get into the corporate space when I was out of college, and it was all learning, but it really, really helped me a lot. So even I would like you to have that same curve wherein you understand something, because once you understand it, you will be able to create more frameworks on your own, right? And that is what exactly I want you to do. The purpose of this 3-month LWB or this 3-month GWM program is to not show you how much we know, is to not show you tools which will give you ready. They're done. 12. So I think we have done with 12. You have 8 more slots. Okay, employed in a profession, right? And you are wondering whether this is for you. This is for everybody. So introducing a new early bird benefit to all of you, right? I want to introduce you to SpringPad Mutual Funds, which is our AI-driven mutual fund research and investing platform. Let me show you SpringPad MF. So this is the thing, right? So over here, if you come to goals, and I'll show you exactly what problems it solves. Let's say you want to have a goal, right? It can be anything. Let's say buying a house, anything. And the current cost of that goal is, let's say, 5 crore rupees. Okay, let me do that. Let's say you're building your retirement fund. And you think as of today, if you had 5 crores rupees, it would be enough for you to retire on. So now, but there is inflation. So let's consider 4% inflation. And you are going to do this for the next 30. Let's say you're 30-year-old, you're 30, 35-year-old, you're going to retire in the next 30 years. You want to have a retirement corpus which has the same real value as of 5 crores as of today, correct? And you are expecting a return of 15%. Okay. So you click on build my goal. It tells you how much you need to invest every month to be able to achieve this goal at the end of 30 years. Now, this is something any mutual fund calculator can help you do, right? This is something a little bit of Excel, a few good mutual fund calculators, it can help you do. But where does the problem lies? Are ye 28,796, where should we invest? That is the main problem. And then what do? We go and see which fund has performed good historically, choose those funds, and then we invest. And let's say 28,000, right? We are investing in 5 funds. We will do equal investments in all 5 funds. Is that something that we have been guilty of doing? Yes or no? Yes. But do you think that makes sense to be so arbitrary in our approach to investing? Do you believe that being that arbitrary, or do you think going and looking at the last 5 years return is the smartest way? Does past performance actually predict future performance? No, right? And what is the problem is mostly mutual funds, and you go and see this yourself, by the way, mutual funds which have given very strong returns, highest returns in the last 5, 6 years, you will see in the next 3, 4 years, they will give subpar performance. Correct? So, how do we solve this problem? And we actually went ahead and did that, right? Okay, ye 28,000. Okay, we need to invest this much. Where do we invest this 28,000 rupees to be able to generate approximately 15%? So, I will quickly log in and I'll show you how it works. Okay, so you click on next. Let me see. So you just have to click. So after 5 years, it becomes 7.5 crores. Just a second. Let me enter the details again. Others, okay. 5 lakh, it got set. So we want 5 crores, okay, at the end of 30 years. And expected return is 15%, and our inflation rate is 4%. Build my goal. Okay. Click on next. Achieve your goal. For after 30 years, it should be equal to 16.21 lakh crores. Maneet Singh, we will tell you everything about how to use Bullseye as well, how to use this when we start with the program in the intro call today itself. Okay. So how do you make 16.21 crores at the end of 30 years? Just click on achieve your goal on SIP. And over here on the right of your screen, I want to focus your attention over here. Do you see 8 different funds which have been identified to meet your objective? Yield fund, which is bond fund, low duration, Sun Life corporate bond, large cap, regular growth. Yes. And not just that. So it identifies the requirement for you based on your need and your goal. And also, not just that, it tells you that you know what, how much to put. So let's say 25% in this, 10% in this, 25, 15, 7.5, 10%, 7.5%. So what problem is it solving? It is solving the most important 2 problems, the platform of choosing the right portfolio of funds for each goal, and also how much to allocate to each and every fund in a particular goal. That is the problem which our AI engine in SpringPad mutual fund actually solves, right? And you get tons of other features like doing mutual fund research. If you have an existing mutual fund portfolio, you can map it and do analytics on that as well. And the best thing is, as a early bird benefit, you get exclusive access to SpringPad mutual funds free for a lifetime. How many of you are super happy with that? As a part of LWB GWM right? You get exclusive free access for a lifetime to Springpad mutual funds. Super happy. Not just that, you get access to Bulls AI as well, which is India's first AI driven algo trading platform, which we are proud, owners of. We take pride in the platform, and you will get 3 months of free access to Bulls AI as well to do absolutely one click automated trading for you. By the way, there are multiple strategies. As you guys know, Springpad Wealth Solutions is a SEBI RA platform. So there are multiple strategies which are tried and tested by our team of quants and technical analysts, and you can just go and click and use them as well. I'm pretty sure Pratik would have shown you that yesterday, right? So you get exclusive access to Springpad's AI driven tech platforms, both Bulls AI and Springpad mutual funds, as a part of your early bird benefits, right? Happy with these two platforms, guys? Yes, yes. You'll get access to another platform where you will get buy and sell trade recommendations for 3 months absolutely free. Right? It can be anything from intraday, it can be short-term trades, it can be futures and options, it can be value picks for your investments, short-term investments that is, and it can also be momentum stocks, right? So every day on a daily basis, you will get around 4 to 5 trade recommendations based on the market. Sometimes it will be more, sometimes it will be less, but on an average, you'll get around 5 to 6, and you can see what the research is, and you can also take the trades on your own, right? And this is basically, what a lot of us practitioners are trying to solve, so that people don't get lured into false hopes by these Telegram communities. Like, we have an entire team who are in compliance with SEBI. We are SEBI registered, and you will get access to all the benefits that they provide, all the research that they do, and all the trading signals that they are able to come up with. So you can take, we'll be giving you the platform access every day. You will see all the live trades being populated there, and you can go and take them on a daily basis if you want as well. Okay, this is for 3 months. Yes, this is also for 3 months, right? So 3 months will be your, we want to give it to you this in the first 3 months while you're learning, so that you can use Bulls AI, you can use the RA calls, you can use the platform to get started with it. And at the end of 3 months, we really hope and pray that you are able to do it on your own. Correct? Otherwise, if we just wanted to give you the product, right, why would we teach you? Because yes, there is an audience base for these products. People use our algo trading platform, people use our RA platform a lot. But the purpose of why we are conducting is this: first is education. We want to educate you so that you are able to do this on your own. Otherwise, what is the point of teaching you trading if you can't ideate trading signals on your own? What is the point of teaching you investing if you can't identify an investment opportunity on your own? Right? So that is why we're giving you 3 months access to this. And after that, we really hope and pray. And we are confident in you that if you can give us time, if you can give the learning time, you will be able to trade and invest on your own. That is the end goal that both of us we want to have, right? We want to be independent thinkers, we want to be independent actioners, and we want to be able to do it all on our own. And that is exactly what the program is. These are additional features which are going to help you. Apart from that, you get audit sessions twice every week to get your trades analyzed and reviewed during live markets hours. And I believe this is one of the most understated USPs of the program. Only learning. Can you tell me something? Can you drive a car by just, reading the manual? Is that possible? Can you swim just by watching YouTube videos? No, right? So you need to practice. So that, I think, is a major flaw in the market teaching that is happening in our country that we have seen. People teach theoretical concepts, they'll take you through videos, but the real requirement is when you are implementing it in the live markets. So we will show you how it is implemented. All the concepts will first teach you, show you how to implement it during live markets so that you understand. You will do it at the same time along with them. And if you have questions based on your trading, logic, you can get your trade analysis audited as well, right? Not just that, we'll send daily market updates by Pratik and me. It'll go your way so that you are able to cut out all the noise that is out there, and you only get curated market insights and news that is actually required for you to be aware of. Okay. So you will get access to that for a lifetime, absolutely free. That will be a Telegram channel wherein we'll share important market news and updates. Okay. And you don't need to follow any other news. Okay. So that is something you'll be able to get for a lifetime, that is maintained by technical research team. Apart from that, you will have lifetime access to our live market analysis sessions every week, even after your programs have ended for a lifetime. So even after the 6 months have ended, correct, you will continue to receive these regular sessions on live markets wherein the mentor. So if you want to share it, you can share it with your family members if you want to get them started on their financial literacy journey as well. So this is another early bird you get. And the last but not the least early bird that you get is lifetime access to all recordings of LWB GWM, right? You will be having your entire portal access for a lifetime. You can go rewatch any recording whenever you want of the live sessions. And not only that, how many of you think that AI is going to be obsolete? Or ji, Prashant ji, can we send the alternative links and the links again in the chat? 3 more seats left. Rajat ji, done. Perfect. To be a 2-hour call, but believe me, it's an important to us because it is going to set the tone in terms of accesses and everything about the program. Acha, in the meantime, done. Okay. So the prompt for the perplexity, the custom GPT, the prompt for Grok that I used, right? This one, the prompt for financial analysis that I used, right? The screener link and the prompt to extract the results of screener and do the analysis. So all 6 of this you will find in the QR code, and the team will be sharing it they've already shared it in the chat. So resources I have given it. If you want day 3, day 1, day 2 also, you will need to wait for a little while. Because I needed to talk about a few things, and I know that a lot of people would be interested in learning all of that. Because a lot of you wanted to get out of this call quick, I think you have had enough of Pratik and me over the last 4 days. That is why I just went ahead and gave the day 4 resources. If you want day 1, day 2, day 3, the team will be dropping it in the chat. In the meantime, I just wanted to touch upon a few things that I feel is important, whether or not you are a part of LWB and GWM. These are a few things that I believe that you should be aware of. Booking khatam? No, you can continue to book your seat. Okay? The team will be sharing the link in the chat. You can continue to book your seat. But just as a closing note, I wanted to give you a clear view of what are the mistakes that people usually make in the markets, right? Okay? And if you want, please go through this, try and understand this, and let me know if this is something which has happened with you as well. First is acting without a framework, right? You buy yourself because it feels right. Someone suggested it, or you look at the chart or news and it looks convincing. And the usual thought process is that I entered because it was going up. I exited because it started falling. How many of you have faced this, by the way? ऊपर जा रहा है खरीद लो, नीचे जा रहा है बेच दो. And this is it is, and you know what? Even though I'm smiling, this is something which has happened with me when I was young as well, and this is something which is very very common. And you don't. But the thing is, it's important for you to understand that decision making without a predefined entry or exit or a risk management framework is something which should not be done. You decide beforehand whether it is, well, if you're trading or investing, you should always decide beforehand what are the criteria. If let's say this is the current price you're entering here, you should always predefine a stop loss. You should always predefine a target. Target meet nahi hua, koi baat nahi. If it goes here, does not meet the targets, comes back, takes your stop loss, that is fine. But that discipline is important. ठीक है. uh, uh, Sesha, sorry, I'm mispronouncing your name. My apologies for that. Sesha Sai ji, yes, you can do that. Okay. Okay. So this is something that I want all of you, whether or not you are a part of LWB, GWM, when you're trying to implement everything that we have taught you over the last 4 days, please make sure that all the thought process is done before you enter the trade. After that, it should only be a matter of implementation. Correct? You don't do any more thinking after you have entered a trade or an investment. Will we get a certificate for LWB, GWM? Yes, you will get a certificate, right? The other thing is confusing activity with progress. You or let's say somebody you will see that they're checking their portfolio multiple times a day, talking about the stocks all the time. And the thing is, they feel that if you're always constantly tracking prices, news, portfolios, and you're always active, that doesn't really make it quality, right? That doesn't really mean that you're progressing. And people usually confuse with that. And I can only think of one thing. When I was in school, there were so many. How many of you have gone to tuitions, by the way? Fit G, Akash, Alan, when you were in school? I was also from a science background, but I always wanted to move to finance. So there was a student, multiple students, as a matter of fact, right? They used to go for Akash. They used to go for Fitji. They used to have private tuitions at home. They used to study in school. And the thing is, they were always active. Correct? Ye tuition, wo tuition, ye tuition, wo tuition. Unfortunately, none of them did really well, neither in their school boards exams or their what do you call it, or the entrance exams. Why? Because you are just being active. When are you actually learning or improving? Do you can you do you think this has happened with you as well? Just activity does not mean that you are improving. Improving is a conscious effort which requires time on its own. And I used to feel so sad for those kids. And thankfully, my parents never pressurized me. And I was the topper in my state. And I just used to have one normal tuition only for maths because I used to love maths. I used to finish the curriculum, entire school ka curriculum in 1 month itself. And that is why I think I always had the flexibility. I used to learn out of love for the subjects. Of course, there are a few subjects I just had to study because I had to get my grades up. I used to hate chemistry. But I hope you understand, right? Never confuse activity with progress. Correct? More information is not equal to better decision making. Okay? Then the other thing is letting emotions override process, holding on too long due to hope or exiting too early due to fear. Like how many of you have done this? When you see a loss, a small loss, as soon as it goes, okay, selling us positions for a small loss, only to see it recover later. Lal dekhna hi nahi hai. Correct? But never do that. Never be emotional when it comes to trading, right? And on the other hand, I have seen people book profits fast, but hold on to losses. Why? You should hold on to ones which are making profits and cut your losses as fast as possible, right? But no, we are egoistic. अरे लॉस कैसे होगा? And then we are hopeful, right? नहीं नहीं recover कर जाएगा. I don't want to exit in loss. This happens when there is no predefined rules, right? So always have predefined rules before you enter or exit a trade. Correct? Then you have overconfidence. All of us, I was talking about COVID babies, right? Everything is working unless it stops working. Assuming early success reflects skill rather than market conditions. So please don't never mistake short-term outcomes from long-term ability. If you think that one strategy is working fine, build work on other strategies, because that one strategy, no strategy keeps on working fine for year after year. You have to keep on improving strategies, working on new one, right? So don't get overconfident. Learn to learn from past mistakes. Very, very important. Learn to learn from past mistakes. If you make a mistake, learn from it. Never repeat that mistake again. And the thing is, people miss out on this. They do the same mistake again and again. Take it as an opportunity to learn, have a trade journal, log your trades, analyze your trades afterwards, and do a proper post review decision. Okay. And last but not the least, depending on external opinion, never do that. Stop relying on tips, influencers, or headlines to validate decisions. And that is exactly, you know, the problem which has been plaguing our country since this COVID thing, like the lack of independent decision making capability. And that is exactly what we want to bring to the table for you, to help you learn everything so that you are able to do it yourself again. And you might be thinking, Rahul sir, itna badhiya ho gaya. Why are we discussing mistakes at this point in time? Why are we discussing mistakes? Right? Because if you look closely, right, most long term underperformance, and those are empirical studies which have been there, doesn't come from intelligence or effort. It comes from repeated decision errors. That is the problem which plagues most people. They make the same. Yes, sorry. How many seats left? I'll let just ask the team. Only one seat is gone. You have two more seats left. You can go ahead and book your seat. Okay. Payment link the team will send. I don't want to talk about payment. You go and do your bit. If you want to join, you join. I would like to share something which is a little more enriching in the meantime. I know for a fact those who want to join, they will join. I don't need to ask them to join again and again. Okay. And it is not a compulsion. Okay. But are we discussing mistakes? Because, there's a saying that failure is the best teacher. How many of you would have heard of this? Failure is the best teacher. Yeah, we have all heard of this, right? But the good thing is that these failures, they don't need to be your own. You can learn from other people's failures as well. And that is why, learning from a community, having other people, trading can be a very lonely task. Investing can be a very lonely job. It is important to surround yourself with like-minded people, to have that exchange of ideas, and also to have that flow, right? And you know what? This program is exactly designed to address these gaps, building your own framework, understanding risk before you try and understand reward. Again, irrespective whether you are in this program or not, पहले risk देखो, फिर reward के बारे में सोचना. That is something we work on. Improving decision discipline, right? Always have a strategic and a systematic framework, and learn how to think independently under uncertainty. This is something that we are, trying to cater to across these two programs. And hopefully, if you give us time, if you allow us, if you are open to it, if you put in that effort, hopefully this is what we'll be able to do for you as well. Right? Of course, I'll end with only one thing. There are no guarantees in the markets. There are no guarantees for me, for Pratik, who have been here for so long, and there will not be any guarantees for you. I can be very honest about that. But what we can tell is there's a clear difference between reacting to markets and participating with structure, clarity, and intent. All you can do is be prepared for everything and have a plan of action for any sort of market scenario. That is all that you can do as a participant, as a trader, as an investor. Correct? Don't react. Be prepared and act independently, preemptively. Because education does not remove risk, it helps you understand risk before it actually becomes a risk for you. Okay. So that is why I just wanted to take a little bit of time to, discuss these mistakes. Of course, education does not only mean LWB, GWM. We are doing that. All of you who have enrolled, we are more than happy to have you, right? And all of you who have not enrolled, I would just make it a request that don't participate in the markets with half baked knowledge. Take whatever you have learned across these 4 days, implement it, and keep on learning more about the markets. Okay? That is my last 2 cents on it. We have two more seats left. Before I ask questions about the two more seats, I'll just give you access to the day 3, day 2, and day 1 resources. Do you want day 4 resources again, or have you taken that? Manish Singh ji, don't worry. Manish ji, don't worry. You know what? If possible, you can book your seat. We'll see. Okay. And irrespective, again, whether you're joining, not joining, please make sure that you continue your education in the markets. And because believe me, I strongly believe that this is uh, the only avenue which can work as a supplemental source, I would say. Of course, there is no guarantees. It you can end up making losses, you can end up making profits. I make losses, I make profits, right? But when done right over the course of time, uh, and if you are able to be profitable, it's something which you can do strategically uh, at the side, and it's the only thing which can be scalable to something full time, right? Your job is not going to cut it. I realized this when I was in my profession, and believe me, I was privileged enough to be, you know, top 1% salaried sort of professions. I was privileged enough to be there, but I still realized it is not enough. You will always play catch up to inflation. You will always play catch up because at the end of the day, you're a part of a business. Your job is to make money for the business, and then the business will maybe give you a drop in the ocean, right? So I used to have a lot of respect for people who were doing their own business. I took my learning. I, you know, I'm fortunate I was able to be introduced into the industry, be it private equity, investment banking, wealth management. I'm happy that I can do it now. I'm happy that I have been, even though I don't from a tech background, Pratik or neither Pratik, we have been able to scale gradually, hire tech people to build the product, to give life in a technological world to all the theoretical and technical knowledge that we know in terms of trading and investing. So yes, and I think that why we are doing it because I'm sharing day 2 resources right now. Yes, class is over. If you have any questions, and every step of what Pratik has shown you, I have shown you where to click what to toggle on, what is the logic, everything you will be getting in a detailed, proper 70, 80 page PDF, all 4-day FFA notes so that you don't miss out. I know we are not sending out record. Uh, Mohan Purani ji, see SIP in investing small cap mutual funds, that is one way you can do, or you can do a mix of both that as well as having a small cap portfolio of your own. So you can do a mix of mutual fund, small cap mutual funds and independent small caps. So I do independent small caps. That's an interesting question. As well as I have a very, very small SIP in like small cap mutual funds as well. Right. Okay. Money, you know what? If possible, book the seat. Otherwise, since you are a student, see, knowledge is important. But the thing is, you will be able to put it into practice after, let's say, a couple of years, right? So if you are a student right now, I would say focus on your college education, correct? Do it to the best, and then find yourself a good job in your profession. Start that income, because at the end of the day, what is the use of this knowledge, right? To take that income and put it to proper use. But to be very honest, if you're a student, you don't have an income right now. So your job should be to first focus on that income, right? I know I still have one more seat left. I would have loved for you to join, but my advice would be focus on your college education, whatever vocation you are in. Do that first, and once you start having an income, then you start thinking about the markets as to what how you can make that income grow even further.